have asked the Securities and Futures Commission and the Hong Kong EX to work together to explore the viability of our own Hong Kong version of specs. We remain very confident on the competitiveness of the Hong Kong stock market.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Surveillance. Good morning, everyone. On this Jobs Day, worldwide and across this nation, Lisa Abramowitz, Romaine Bostic in for John Farrow, and I'm Tom Keene. Thrilled you're with us. And yeah, there's a market response. Romaine, let me go to you very, very quickly here. I mean, am I right to say equity's out to record levels? Is that a safe future statement?
Yeah, you can pretty much price that in and write that into the book on this day. You're seeing that on equity futures. You're also seeing an interesting move here in the Treasury market as well here, a reaction, of course, to that 9/16 print that we got today.
Yeah, well, it's interesting to see, and again, 4,027, the S&P level. What we're going to do here is bring in Tiffany Wild. We've got a good half hour set up for you to think about the forward move to April, a bang-up jobs report as well, and Tiffany Wilding joins us from PIMCO, our chief U.S. economist. There's the news, and then there's the guesstimates. We now have the news of a near 1 million payroll statistic. Tiffany, do you at PIMCO readjust your economic outlook off 1 month's good news?
Well, of course, we always say the rule of thumb is you never want to ever read anything in too much into any one print. But I think overall this print was pretty strong. And I think it confirms other high frequency data that we're getting that we are seeing a pretty big acceleration in the economy in March. And I would say that that's probably before many forecasters thought we would. Now here at PIMCO, we thought that as you get more people vaccinated and not just herd immunity, but you get those people that are in the highest the highest risk buckets, you get those people vaccinated and you can actually start to get economic activity going again. So we think today's report is just a confirmation of that, and that's ultimately good news.
So, Tiffany, there's also a question. One thing that you've said in your outlook is that you believe that there's going to be a head fake in inflation. Can you pair that head fake idea with this better than expected jobs report? And by all accounts, as you say, the high frequency data pointing to a market that's running hot and certainly an economy as well.
Yeah, I mean, so we think that the inflation reports over the next several months will actually be quite strong as well. And of course, you get these, what economists call base effects, which impact the year-over-year rate. So, it's quite possible for the year-over-year headline inflation rate, to be over 3.5%, which would be the highest rate that we've seen in quite some time. But ultimately, we're calling it a head fake because although you're going to get some very strong reports over the next several months, ultimately this is a price level adjustment. So it's not an issue of sort of broader persistence in inflation, we don't think. We think the economy normalizes and with it prices normalize as well. You'll get some temporary inflation, but ultimately that'll sort of come back down. We're not really worried about some extremely high inflation over the longer term or even the medium term.
Particularly with the Fed's refocus in on the labor market, the idea of making the labor market whole, in fact, making it whole at a stage and a scope that we didn't quite see during the last economic cycle. If we are to believe that that is what Jay Powell wants, then why are so many people freaking out over a little bit of inflation?
Yeah, I mean, ultimately, the Fed has even said that they want a little bit of above target inflation, that's actually helpful for anchoring inflation expectations, which looked like they were drifting a little bit lower. But just on your point, though, I just want to highlight that this report today was actually very encouraging for that more inclusive labor market recovery. What we saw in the uptick in participation rates as well as the decline in unemployment rates was mainly concentrated in female participation and and the unemployment rates of minorities. And that's the type of thing that the Federal Reserve is looking for. These were the folks that were most impacted by this crisis. And it's very encouraging now to see, that when jobs are coming back, that they are also disproportionately benefiting.
Now, Tiffany Welding, please stay with us with PIMCO, their chief U.S. economist, here on a nation looking at some form of prosperity and labor employment off of 1 year of hell. There's no other way to put it with this pandemic. We need a briefing from Washington and from the Biden administration. He is Martin Walsh. He is the U.S. Labor Secretary, but far more, the former mayor of Boston. And Marty, I'm not going to mince words with your storied past. You are really the Secretary of Labor for Laborers Union 223. We haven't had a labor secretary since time began, since Washington visited Boston, more entrenched with labor in America than the gentleman from Boston. Your president says he represents unions. Will the unions go along with your president amid this boom economy?
Well, I hope so, and thank you for having me this morning. Certainly, it's a good day here at the Department of Labor. I've been here for about 2 weeks. This is my first jobs day, so and the results today were very encouraging.
They're very encouraging, Secretary Walsh, but what I would really point out is this infrastructure bill is a statement of renewed labor intensity and energy in America. Are you optimistic that you could reinvigorate labor? How will you do that?
Well, I think you can reinvigorate labor with this bill, but also the entire American economy as we move forward here with the American Jobs Plan. I mean, inside that bill, there's lots of components that get America back to work, to add to the news today, but also rebuild America, quite honestly, with infrastructure, with climate resiliency and climate change, with clean water, with racial equity in the care economy and the caregiving economy. There's lots in this. Labor will be very happy with this plan, but not just labor, the American movement, America as a whole should be happy with this plan because it's kind of the next step from the American Rescue Plan, and we saw some benefits of the Rescue Plan today with good economic policies, a competent vaccine plan. So it's about building momentum. A year ago today, the secretary stood probably right where I am, and he was talking about the job losses in this country from the previous month because of COVID-19. 1 year later, we're coming back, and we're going to come back strong. And with this American Jobs Plan, we're going to come back stronger than ever in our country.
So, Labor Secretary, there's a question here going forward about whether we have the labor required to fill some of the roles that we are looking to build out. And I'm thinking infrastructure in particular and manufacturing, where we see job openings continue to increase and yet not necessarily people getting hired, not people to fill them. How are you bridging that gap? Where do you see immigration? Where do you see unions playing into that particular issue?
Well, I think first and foremost, we still have almost 8.5 million Americans right now out of work. There's also some other Americans that have not been in the workforce in a bit. It's about encouraging those folks to come back into the workforce. And then we need to have conversations about immigration. There's no question about it. The city that I was mayor of, we have a lot of biotech companies and tech companies, a lot of college universities that were educating not just kids from all over the United States of America, but quite honestly from all over the world. And those are conversations that we're going to have, and the Biden administration is going to have those conversations. And I'm going to have those conversations right here at the Department of Labor as well, as far as moving our economy forward. Again, it's about creating good opportunities, creating the middle class, strengthening the middle class, and it needs to be an all-hands-on-deck approach.
Does this labor report, because it was so good, make your job more difficult to lobby for that $2.25 trillion plan?
I mean, I think it was a good report, but we're talking 1 month snapshot. I mean, I think that we still have lots of concerns out in the economy, still have concerns with COVID. COVID's not gone away yet. There's other variants of COVID that's popping up in different places in this country. So, I'll celebrate, I'll take the victory today, I suppose, or the encouraging news, but we still have a long way to go. We're not anywhere near where we were a year ago today. Well, actually, I should say a month ago.
All right, well, when we talk about the need to celebrate and the idea of sort of getting the job market, the labor market back to where it was pre-COVID-19, Marty, there's also a question here about wages and sort of what policies you're going to pursue down there in the Labor Department that's going to ensure that with that job growth, you're also getting some sort of meaningful wage growth for those folks coming back into the workforce.
Well, I think that's important too. I mean, when we look at this report, the report doesn't really tell us that there's big wage growth, but what we have to do is continue to work. It's about creating good-paying jobs, and I think the American Jobs Plan, a lot of the jobs that are built into that plan, that can be built into that plan, are going to be good-paying jobs, and that's what we have to do is continue to create good-paying jobs. And if we have more and more good-paying jobs, that will rise all the other jobs and salaries in different industries.
Yeah, but there's already been criticism of the Biden proposal, saying that a lot of the jobs that would be an outgrowth of some of those proposals would probably still be at the lower end of the wage spectrum, at least for some of them here. And the idea here is that if you can't pitch this to the folks out there in America, that this is not only creating jobs, but actually creating wealth, creating tangible wealth, it's going to be a hard sell.
Yeah, and I think that this plan will create wealth. And I think that the American public, if you look at the polling numbers on the American Rescue Plan, we're very supportive of it, both Democrats and Republicans. And I think when we have an opportunity now, the president announced it in Pittsburgh 2 days ago, we're going to have an opportunity to go out and talk to America about it. We're going to go out and talk to Congress, obviously, about it. We're going to be talking to you about it. And I think as we get more time to talk about this plan and people get the chance to dig into the plan, they're going to realize that this jobs plan is actually a very good, strong, solid plan and will help not just raise wages, but also bring more people into the middle class. And I think that's ultimately what President Biden, what he wants to see here.
Marty, just 20 seconds. You were among those pushing for the Amazon HQ2. Do you support Amazon's push among the workers to unionize?
Yeah, we're waiting to see. I think the results coming back in the next couple of days, so I'm looking to see what the workers want to do there. I mean, it's certainly their right. I think everyone should have a right to join the union, and everyone should have a right to take a vote on it. And we're going to sit back here and wait and see what the result is.
Marty Walsh, thank you so much for being with us. Marty Walsh, U.S. Labor Secretary, joining us here. A wide-ranging conversation as he takes a look at a labor market still very much pocked by the pandemic, still very much having a difficult time, and yet here we are with a brighter way ahead. Right now, we are looking at markets that are closed mostly, except for the Treasury market, which basically you're seeing yields up a bit after this report, off the highs, but still up 3 basis points. The dollar firming up here versus the euro and also versus all the currencies. Yeah. I got to say, Romain,
the ask on Bitcoin coming down, though, 59,134.
Bitcoin is the big mover today. But, Tom, this really does raise a question about, to me, whether there ends up being a harder sell for the Biden administration, given the fact that you do have a robust labor recovery underway.
I think you're going to see a partition within it. I think what's going to be interesting here is not what we see in this report or the next report, but let's go out 2 or 3 reports and see what the dynamic is. Lisa, as you mentioned earlier, the key statistic today was the reduced wages because of low-wage jobs. That doesn't get it solved for President Biden.
No, but we want to get those back into the labor force, right, Romain?
Yeah, get them back in the labor force, but at some point, people need to get paid, and they need to see some meaningful appreciation.
Yeah, well, coming up, we're going to have more conversation with Tiffany Wilding, Chief U.S. Economist of PIMCO. This is a special edition of Bloomberg Surveillance on this Jobs Day. Happy Good Friday.
With the first word of news, I'm Rishka Gupta. There was a surge of hiring last month by American employers. They added 916,000 workers to their payrolls, the most in 7 months, and that was well above the median forecast in our survey of economists. The unemployment rate fell 0.2 of a percentage point to 6.2%. The labor market is being supercharged by fewer restrictions on business and more Americans getting the vaccination. A top White House aide will lay out U.S. strategy towards North Korea and Kim Jong-un today. National Security Advisor Jake Sullivan will meet with his counterparts from Japan and South Korea at the Naval Academy. President Biden has warned the U.S. will respond if Kim escalates recent missile tests. California reservoirs are half empty and dryness has reached levels similar to the historic drought 6 years ago. The government says the state is facing its 3rd driest year on record. The last time California was this dry, the state imposed widespread water use restrictions. In China, regulators plan to impose additional capital requirements on the country's too big to fail banks. Systemically important banks will be put into 5 categories and face a surcharge of up to 1.5% on top of mandatory capital ratios. Lenders will also need to make detailed plans on how to recover from a crisis. Tesla blew past estimates in the first quarter, delivering more than 184,000 vehicles. Elon Musk's company says it was encouraged by the strong reception of the Model Y in China. Tesla builds the Model Y both at the factory in Shanghai and at the one in California. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Tell us something you're doing that doesn't work out, where you've failed or something you can say you're not good at.
Let me tell you something. There is plenty that I am not good at and plenty that I've failed at, but I'm not afraid to fail.
Asia is absolutely core to our business. It's almost 20% of our franchise revenues globally, which is significantly more than most of our global peers who are more in the mid-teens.
We want to invest, grow in China, but also we are also investing in the rest of Asia as well. Our top line growth for the region has been close to 24% last year, almost 20% of the group's revenue as a percentage of the revenue of the group. So, and this is where the group is counting on the growth.
We see company after company, these are corporates committing to net zero. So pretty much across the board, there is an enthusiasm for putting capital to work to try to get us to a better carbon future.
Credit Suisse has a fantastic brand name in Asia. We have obviously strong positions in Singapore and Hong Kong as our two main hubs, but across the region.
Emily Chang explores how a chip shortage snarled everything from phones to cars on a Bloomberg television special, Chip Crunch, Wednesday on Bloomberg Technology.
It's such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
Ultimately, it's billions of dollars from the government that will pull that vaccine through and purchase it for Americans and people in low-income countries.
Surveillance on a jobs day. We say Good Friday to you and Passover as well. On this holiday, a jobs report and a bang-up jobs report. There's a little bit of market action. Romaine Bostic in for John Farrell. Romaine, I know there's the close. It's not going to happen today.
No, not
on
today.
Bloomberg Worldwide. So close it out right now on the markets.
We'll close it out. Yeah, well, you had equity futures actually moving today, actually moving higher here. You're getting 4,027 right now on futures. Of course, we closed at that level on the cash market yesterday. So that's pretty much where we're going to start here on Monday morning, barring some major development here over the weekend. Of course, you're seeing moves here in the yield space, and keep an eye on that space on Monday, 171 right now on your 10-year yield. You're looking at a 5-year right now at 9.6 here. The dollar, a little bit of movement there, and you see the euro dollar there under pressure there for a lot of different reasons. But at the end of the day, there's a long-term narrative here, Tom and Lisa, a narrative that now, at least based on the report we got today, that one report seems to still be intact.
Lisa, your observation, and then bring in Tiffany Wilding of PIMCO.
The observation here is that this was a really good report. It was near the upward estimates in terms of what we could potentially expect, near 1 million jobs. The question now is, how hot can this labor market run in order to bring back the more permanently unemployed into the market? And Tiffany Wilding, that is exactly where I want to go. I want you to come in and really weigh in on what it will take for this economy to get hot enough to bring down that elevated permanently unemployed figure that we currently see.
Well, I mean, we actually saw a little bit of a tick down in permanently unemployed today. Now, it's kind of been moving sideways, but I think ultimately that's good news. But you're right in the sense that most of the gains in the labor market so far have been from those people that were still attached to their, their employers. So the people that were saying they were basically temporarily unemployed. So there's still about 2 million of those folks to go to be reemployed, and that probably happens reasonably quickly as the economy, gets back to normal. As folks are vaccinated, we kind of get this pandemic hopefully behind us. And I agree with you that then the question is the long-term unemployed, how quickly do we get them back? And that's really going to depend on the amount of economic reallocation that needs to happen because of this pandemic, and how fast that can happen. And I say economic reallocation because there will be permanent effects of this crisis, and that will result in some of the old jobs, never coming back, but then hopefully new jobs that people will be able to migrate to. But it's, again, just a question of how long that takes.
So this nexus of a changing economy, with tech taking more of an emphasis here and some of the other jobs falling away, paired with this idea of wages, can you draw that line? Basically, are we going to see wages go up from here after this initial bring back of some of the laid off workers that were temporarily laid off? Are we going to see wages materially increase without some sort of structural push either on the union side or some other fiscal narrative?
Yeah, well, ultimately what's going on right now is just the labor market is sort of reorienting. So those service sector jobs, which were, are lower paying, that went away during the crisis, they basically boosted up the measures of wage inflation. And now that those service sector jobs are coming back, they're normalizing those again. But I think that your question is a really important one, because ultimately what we want to see is real wages rising, and we want to see labor's share of economic profits. The thing that the economists like to watch, we also want to see that rising. That's been on a secular downtrend, for the last 50 years. The Biden administration, with various labor policies, is certainly trying to reverse that trend. A hot labor market tends to result in higher real wages for those most those lowest paying jobs, and that's ultimately a good thing. We hope we get there.
Okay, Tiffany, you're killing this, because labor share is really what this political debate is about. This is a reallocation of the haves to the have-nots. Most of the haves are going to fight this kicking all the way. Do you and PIMCO, do you have an optimism that this president can reallocate and finally move the needle to a growing labor share?
Well, ultimately, I think what you can hope for is it's the start of a good trend. Now I think it took 50 years for labor share to decline as much as it did. We hope that it doesn't take 50 years for it to, reaccelerate. But I think that the types of policies that this administration is doing is in the right direction. You have Marty Walsh, which suggested, that they're going to try to create good-paying jobs. It's really when the government starts to compete for labor that you can start to see that spill over into the private sector, as they need to raise their wages as well to compete for that labor. So that's ultimately going to be a good thing. But I think you have to keep in mind that a lot of this was structural. So there are a lot of laws that were passed as state laws, right to work laws, that actually did a lot to reduce labor bargaining power, as well as the potential for unionization. So those structural things also need to be
this is we could go like 4 hours on this. Romaine and Lisa, don't go away. Tiffany and I are going through this through the morning. morning. Tiffany, this is so important. Can we make this labor shift that President Biden's speaking about endogenously, I got it out, thank you. Can we do it within our laws, within our system, or we do it on a zero-sum basis by taking in labor from abroad? Can we really do it within America?
Well, so I think what you want to do here ultimately is just raise people's productivity, because once you raise productivity, then people should get paid more, really, because they should really get paid for how many hours they work and how productive they are. So how do you raise people's productivity? Well, you start with training, as Marty Walsh suggested, and you have more focused training on the jobs of tomorrow and what we need. But you also have to invest in capital. You have to make investments in the United States, which the Biden administration is also hoping to facilitate. So either in manufacturing or in other things, which workers can use to make them more productive. So you really need an all-inclusive policy here, that makes the U.S. more competitive and increases productivity and therefore real wages along with it.
Tiffany, thank you so much. Tiffany Wilding, wrapping up our coverage here, really across these 4 hours of the American labor economy. She's with PIMCO, their chief U.S. economist. Romaine, what do you think about that? Do you have any optimism that President Biden can take us back to FDR?
I don't know. I mean, that's kind of a loaded question. I do think that there are gains in productivity and, more importantly, gains in the wage space that can be done here, at least based on the proposals that he's made. Now, whether he can sort of convince the Republican Party to go along with it, that remains to be seen. But there are some structural things working in his favor, once in a generation type things working in his favor. It'll be interesting to see just how successful he and his deputies can be in getting this pushed through.
Lisa?
Well, I'm just really wondering what we can do to get better paid jobs back. What is sort of the prescription there? We talked about unions with Marty Walsh.
Yeah.
I'd be curious to hear the economics perspective of case studies in the past. I mean, is that the way to do it? Is it investment in technology? These are going to be the questions ongoing for the next few months.
Speaking of unions, and our Secretary of Labor, the former mayor of Boston.
Are we unionizing?
No, we're not. The players are unionized. I'm just worrying about the productivity of Red Sox pitching.
Red Sox
pitching. It's not happening there. They start with the Orioles today. We say to all of you, and on behalf of all of us at Bloomberg Surveillance, even John Farrow as well, Romaine Bostic, thank you so much for joining us today. We say to all of you, have a wonderful weekend. Yes, Monday, I'll be here with Kaylee Lines. Early in the day, because London is like smarter than we are. They're completely shut down. Chandler, Peterson, Weinberg, Lefkowitz. That's a great lineup to drive your Monday forward. Thanks so much for being with us on radio, on television.
Madame Lagarde, has the balance of risk actually shifted since the last policy meeting?
Well, our balance of risk is still tilted to the downside in the short term, but it is much more balanced in the medium term.
What are markets exactly playing out at the moment? They seem to be continuing testing central banks.
They can test us as much as they want. We have a mandate, we have an aim, we're going to be riveted to that, and we're going to do what is required.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
It has the makings of one of the tech world's greatest comebacks. Chinese internet old-timer Baidu has pulled itself back from the brink of near obscurity, and it's now on the cusp of re-emerging as one of the country's most influential companies after losing its lead to a string of hard-driving competitors. Bold bets on autonomous vehicles and AI chips are starting to come good. Its smart speakers and cloud businesses are posting double-digit growth. But a government crackdown on China's tech champions is casting a long shadow over the sector. And that competition, well, it's only getting more heated. Now, after more than 3 years, the US-educated founder and CEO of Baidu, Robin Li, has agreed to speak exclusively to Bloomberg TV about his company's transformation and about his future. This is a conversation with Baidu CEO Robin Li.
Looking at almost record highs now for Baidu's share price. Do you see that as a validation from investors for this strategy change, this focus on AI, on autonomous vehicles, on semiconductors?
I think our strategy has not changed much over the past 2 or 3 years. It's that the market takes time to realize that autonomous driving or AI has big potential, and Baidu is having a lead on that. So 2 years ago, or even 1 year ago, when we spent a lot of money in AI, in autonomous driving, it was a negative, impact to our stock price because you lose money by doing that. It hurts your EPS. Nowadays, it seems that investors' sentiment has changed. They all of a sudden realize that, this thing has a big future, and Baidu's investment in AI and in intelligent driving will someday pay off. And I'm happy that the market has started to pick up this kind of message. But for us, we've been investing not for 1 year, not for 3 years, not for 5 years. We've been investing in AI for more than 10 years. We probably lost a lot of money by doing this, but I think eventually we will be rewarded by doing this.
What is the rationale then for this secondary listing in Hong Kong?
I think it's quite straightforward. Baidu is based in Beijing, and we want investors in Asia, those who are in the same time zone, can easily invest in Baidu. They can have a better opportunity to grow with us. And, there were U.S.-China tensions for the past few years. I think investors also have this kind of concerns. Although we're not that concerned about delisting, but I think having another exchange for Baidu stock is overall good for the investors and also good for people around the China area to really share our growth.
And you're really talking about going out on a limb as the business 8 years ago, 10 years ago, to invest in these areas when many others weren't. How much of an advantage then do you think that gives Baidu going forward?
That gives us a lot of advantage because this kind of technical problems are very hard. It takes time and it takes a lot of money to really get that done. Or I would even say today, we're not done yet. We're far from done. We will continue to invest for the next 10, 20 years, and our pace of investment will not slow down. We will continue to add more to our R&D budget so that we will maintain this kind of lead. AI is a very broad market, and it can be applied to many, many industries. And there are lots of innovation that can be done when you get into those specific industries. I'm very confident, and also I'm very determined.
What are the growth prospects for the broader business looking like heading into the rest of the year?
This year, we have an easy comp. Last year, because of COVID, our business was affected. So this year, the core business will have a pretty good growth rate. But more importantly, the new business, the new AI-enabled business, be it AI cloud or intelligent driving, it's been growing very fast.
Well, you're right. So double-digit growth is what we've seen in terms of your AI-powered smart devices and the cloud unit of the business. Does that growth continue to accelerate?
Yes, especially for AI cloud. We separately disclosed the cloud revenue. Each quarter, you can see that it's growing very quickly, and the growth rate for Q4 was higher than Q3, and the growth rate for Q3 was higher than Q2. So it's quite obvious.
I believe advertising revenue accounts for about 70% of overall revenues. Non-advertising revenue is clearly increasing, as we just touched on.
Yeah.
At what point do you see non-advertising revenue overtaking advertising revenue? And if so, what time frame?
Yeah, it will happen. I cannot see, accurately which year, but I think the trend is quite clear. This is not, Baidu is not alone. If you look at other, large internet companies, most of them, for most of them, advertising is a minority of their revenue.
What kind of acquisitions might you be looking at this stage?
We think technology is at the core competence of Baidu. We would look for technologies that could complement with our own strategy and technology portfolio. But in the meantime, if we are short of, let's say, operating experiences or talents, those are all possibilities.
And would you be looking domestically for those acquisitions primarily, or overseas as well?
I would say primarily domestic. We were more optimistic about international before, but because of the trade tension, it's increasingly difficult for us to invest in the U.S.
You studied in the U.S., of course. You've built an incredibly successful business here in China. Where do you think the U.S.-China relationship is going ultimately?
My preference is certainly that both countries can work together, and I think by working together, a lot of things can be done faster, and the world will be better off. Like you mentioned, I spent quite a few years in the U.S. I know the U.S. well, and I love my country. I love China. I think for Baidu's success, we obviously are rooted here in China. We will benefit from a very large market and the government policy to encourage innovation. But we also benefit from our U.S. partners. They supply parts. They help us to grow faster. I very much like to stay coupled instead of decoupled.
Coming up, why Robin Lee says his autonomous cars could soon be taking on Tesla.
I'm quite confident that we will be able to roll out the most advanced car in terms of autonomy.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America. BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Chang explores how a chip shortage snarled everything from phones to cars on a Bloomberg television special, Chip Crunch, Wednesday on Bloomberg Technology.
You have a partnership with Geely, one of China's biggest car makers, for autonomous electric vehicles. What is the aspiration with that partnership?
We realize that we have never built cars before, and we need help. And Geely is a natural fit because they are one of the leading car makers here in China. They have a lot of experience, and they ship millions of cars every year, and they have a good capability of managing the supply chain to ensure the quality and cost, all that kind of things that we're not good at. When I talked to Li Shufu, the founder of Geely, we are very much on the same page. He wanted Baidu to control this car maker company, and we want to get the expertise from their car making experience.
What's the production time frame? How many units are you targeting?
A car, it really typically would take about 3 years to get a car onto the market. We'll try to get it on the market sooner rather than later. It's probably too early to announce a number of units at this time because it's still early. But I'm quite confident that we will be able to roll out the most advanced car in terms of autonomy.
But before 2024, it sounds like.
That's right. That's
okay.
Right.
And you talked about the competition, Tesla, of course, but also Xiaopeng, NIO. We're also seeing the likes of Foxconn, Huawei, Evergrande, all kind of moving into this space. Very competitive.
Yeah.
Is there a risk of this being oversaturated, this market?
There are, but again, I think this is a very large market. There will be many players instead of just Baidu. But what I think most people don't realize that it requires a lot of investment in R&D, in technology. And we started back in 2013. In the future, I think everybody believes that autonomous feature is the most important feature for an electric vehicle, right? And just autonomy itself requires a lot of investment in technology. Last year, we spend about 20 billion RMB in R&D. This is more than any other EV company has spent, and probably more than all of them combined, the companies you mentioned. We are determined to spend a lot of money for the next 10, 20 years to make sure we have the best and strongest autonomous platform.
Sounds like Robin Lee versus Elon Musk. Do you think you'll be able to take on Tesla?
I think we are quite different. You know, we are an open platform. We want everybody to be successful. We don't just want to build our own cars. So in addition to the venture Jidu, we also supply technology to other OEMs. We want them to use our autonomous driving capability too. We will probably also run a fleet. We will run robot taxi. We want the consumers to enjoy true self-driving cars sooner rather than later. We want to save their ride-hailing cost. There are lots of things we can do, and we will partner with people to do that. So this is very different from Tesla.
Okay. I want to get more on the AI chips focus, because that's really interesting. You've raised about $230 million US to develop the chips unit of the business. What are you hoping to achieve ultimately?
Well, it actually started quite a long time ago, probably 10 years ago, when we were running a very large server farm, and we need to customize some of the servers so that it will run faster or cost us less. And we found that by designing our own AI accelerator would do that job. So we started this kind of chip design quite a long time ago with a very simple reason. We want to save money for our servers. So starting from last year, we had our first Kunlun chip on the market. It's not really on the market because over 50% of the chips was used by our own server farm. But it served the purpose, right? We didn't have to pay a very hefty price for third-party, high-end AI chips. We could use our own. It saves money and runs faster. It fits our needs better. But then all of a sudden, I realized this is not just for Baidu. It's actually a lot of industry, a lot of other companies also want this kind of high-end AI chips.
And we're seeing that chip shortage play out globally right now. So it seems like a good move. The Kunlun chip is a 7 nanomillimeter chip. You've said you're going to start mass production this year. Has that started? And where do you see most of the demand coming from?
Yeah, the 7 nanometer one is Kunlun 2. It's coming up this year, and it's being produced by the fabs. So we do expect that the performance will be 3 times better, and the internal demand is already there. The external demand, we found that is quite strong because, as you mentioned, there's a shortage on high-end chips.
Can you specify which sectors you expect to see most demand from?
It crosses many industries because AI can help in a lot of scenarios, in a lot of cases, and wherever you need high-end chips, be it a data center or edge computing for smart transportation, for energy sector, for education, or for finance, they all need this kind of high-end chips to do complicated AI.
Have there been any discussions internally about spinning that unit off at some point?
Depending on how you define spinning off, we already raised outside money, so that operation will be run more independently than before. But Baidu is still the controlling shareholder. We will still support them wholeheartedly.
And this focus on AI and on chips dovetails with government policy, the 5-year plan. How much of that is by accident, by coincidence, by design? How helpful is it?
Well, on the surface, I think it's more like by accident. As I mentioned, we started this like 10 years ago, purely out of our own needs. We just want to save money. But along the way, we gradually realized, this is much more important than just internal use. The whole country, a lot of companies also need this kind of high-end advanced chips. as AI is being adopted by many industries, as people continue to realize that higher computing power can generate better AI results, the market demand skyrocketed. So we feel lucky from this perspective, but it's also kind of more like designed because we are a technology company. Our mission is to make the complicated world simpler through technology. This is one of the most important technology in the AI era. If not us, who else can do a better job?
Coming up, China's regulators crack down. Alibaba's been hit. Tencent is in the spotlight. Could Baidu be next?
Minority myth wasn't something that was fabricated by the Asian Americans. It was created as a tool to alienate the Black and the Asian American communities, and it was incredibly successful.
We know that racism didn't begin yesterday. We know it's probably not going to end tomorrow, but it is our job to make sure that there's progress and we keep people safe, give people dignity.
I spent a lot of time last year to just listen, to understand, to reflect and understand what I could do as a leader of this organization.
For many years, we've been very shareholder focused, and now there really is much more of a community requirement.
The economic downturn in the U.S., we're seeing unemployment and income losses affecting women more than men.
2/3 of the jobs lost in South Africa were women's jobs. So I think we're in a moment of crisis.
Clearly, our societies are reproducing, not producing inequality.
We need better public policy, and we need companies to step up.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
This is a market that, over the past few weeks, has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Regulators here are now squarely focused on an anti-monopoly regulatory change, reining in financial technology. How do you think the technological regulatory environment is going to change in China? How is it going to impact a business like Baidu?
The country has never emphasized innovation more than they do today, right? Innovation is at the center of China's modernization, according to the official documents. And I think companies like us, we invest, more than 15% of our total revenue every year to do R&D. I think the government like that. And in the meanwhile, I think antitrust is also good for innovation. You just cannot imagine, the number one and number two guy all of a sudden merge and gaining more than 90% of market share in the US. But that happened quite a few times in China before. That's not good for innovation. So I think that the antitrust push is kind of justified.
Baidu has been fined recently for what the regulators say are monopolistic practices, for not flagging deals to the regulators. Is there a risk that you're going to have to unwind some of your deals?
That's not very accurate to say, because the law probably requires a certain kind of deal seek for approval, right? For that particular deal, we did not seek for approval in time, and it doesn't mean that we had monopoly practices. The fine was not for that. And I also think it's not right for the government to block every deal, right? Certain kind of liquidity is also good for innovation. You just cannot do monopoly things.
Are there steps that you're taking now to adjust to the new regulatory environment here?
Yeah, if we do a deal of large scale, we will seek for approval in advance.
The government is also encouraging companies to open up their data. How do you think that is going to play out? Has that started yet, that drive?
It's very much in line with our belief. We run a lot of open platforms for autonomous driving. It's Apollo, right? For AI in general, we have Baidu Brain, which is also open. We have Paddle, you know, the most popular Chinese deep learning framework. Those are also open source. We want a lot of people to use our platform. We're open to everyone. In a lot of cases, it's free for them. It's not only good for the society, it's also good for us. We get a lot of feedbacks.
A lot of the focus has been on Alibaba and Ant and Tencent. Do you feel like Baidu is better off in some ways, that you're slightly sheltered from this?
Well, I can't speak for them, but like I mentioned, we like openness. We want to share data with other partners, and we think that's good for our technology too.
Another big topic here that involves technology, a lot of debate online about this, is the 996, the almost more than 70-hour work week that many technology companies and their employees go through and is the reality for many people. Do you think that push, that drive, the amount of hours that people have to put into their work in tech companies here, do you think that has to change? Do you think that needs to be rethought, 996?
It depends. If the employees are voluntary, I think that's okay, especially for those young people. If they want to become more successful, they need to work harder than their peers, right? This is just natural. But if, from a company perspective, if you demand them to do 996, I think that's wrong. I think employees have the right to work and to rest and to enjoy life. It's their choice. And at Baidu, we have this kind of philosophy, right? It's really up to you. If you want to work harder, we welcome that. If you want to enjoy life, that's okay too.
I want to switch focus really to you and your future. We've seen some changes at the top of some of the big tech companies here in China in terms of leadership, some big names stepping down, making way for others. Is there a succession plan at Baidu?
I always wanted to find someone who can replace me as CEO. But in the meantime, I do enjoy my current work. I like technology. I like to see all the changes happen. I like to see, you know, our technology can contribute to the society. So whether I'll be the CEO or not, probably it's not that important. It's just as long as I'm doing things that I like, I will be happy. But having said that, I increasingly spend a lot of time these days to work with the Baidu people so that their capability keep improving, especially in the innovation front. I think I need to train them. I need to inspire them to become more innovative. That's over the past year or so, I spent a lot of time on that.
Okay, so you've been looking for a CEO. Who is your number two, though, Robin?
I wouldn't rank our executives from number 2 to number 10. They're all very talented, hardworking, and has big potential. I want them all to grow and become better and more successful.
But you're in no rush to retire anytime soon, it sounds like.
If I have to stay on the CEO position, I will.
Robin Li's ambitious bets on chips and driverless cars has positioned his company to reap the rewards of the next technological revolution. But competition is intense. US-China rivalry could upend the sector, and China's regulations, well, they can change on a dime. Robin Li will need all the skill and luck he can muster to cement Baidu's position at the top of China's AI table. That was a conversation with Baidu CEO Robin Li on Bloomberg Television.
I'm Tom McKenzie.
COVID-19 has exposed a sickness in global society. It's exacerbated deep-rooted inequalities in the United States.
The wealth divide has just exploded in the wrong direction.
Structural inequalities is not healthy. It means we're leaving productivity on the table.
Around the world, migrant laborers are bearing the brunt of the crisis. And while rich nations are well into their vaccine campaigns, developing countries are falling behind.
We're not going to have as swift a recovery in the United States or in Europe if we don't make sure that everybody gets vaccinated.
2.5 million women have left the U.S. workforce due to the pandemic, while corporations face a growing demand to fulfill promises of inclusion.
Collectively, large companies have not done a great job on diversity.
You have to believe it's critical for your business.
As the world starts on a path to recovery, how do we ensure no one gets left behind?
The moment for radical change has arrived. Clearly the system is not working.
Trailblazers in business, technology, and public health convene to map out a more equal and inclusive future. It's time to move from words to action. This is the Bloomberg Equality Summit.
Hello, I'm Carol Masser. The Bloomberg Equality Summit was held virtually as the U.S. marked 1 year since the start of the COVID-19 crisis. In the first months of 2021, new vaccines hold the promise of a return to normal. Even so, it's clear greater efforts will be needed to repair the social and economic damage of a pandemic that has exposed and deepened inequities across gender, class, and race. Leaders at the front lines of industry and policy came together at the summit to discuss how companies and institutions can work to close these gaps and bring about lasting change. The process starts with recognizing the stakes of the challenge.
It's become a vicious, destructive cycle where inequality has fueled the spread of the disease, and then the spread has created both health, economic, and education inequality that further fuels inequality. So I think the moment for radical change has arrived. Clearly the system is not working.
Everywhere you go, the majority of people believe that they should vaccinate their own country first. And they struggle to understand sometimes how important it is to open up economies in other countries because, every country is dependent on imports and exports.
The economic impact of the pandemic has fallen disproportionately on women's shoulders. For the first time in history, for example, the economic downturn in the US, we're seeing unemployment and income losses affecting women more than men.
This is not about doing a favor for women, people of color. This is about EPS. This is about higher EBITDA. This is about business, because we know from the research and the evidence that companies that are more diverse are more profitable.
One thing that COVID has revealed to all of us is that racial equity, structural racism is a thing. It always has been.
Listen, I think George Floyd and the uproar around George Floyd, when everybody saw a man get murdered in real life.
I am one who hopes that what we saw last year in terms of the uprising against the social injustice and the racism in the United States as well as in other countries, perhaps, and I hope, has reached an inflection point.
Women have had the most devastation, women and people of color, during this crisis. And so if we're going to have a full response and a swift response, we have to stop thinking as a world of gender equality as this nice thing to do when we get to it, or this side issue. No, it is the central issue. We are in a crisis for women and people of color in this country.
The Bill and Melinda Gates Foundation has been supporting vaccine research and global public health initiatives for decades. So co-chair Melinda Gates is well aware of the structural inequities complicating the fight against COVID-19. She shared how the vaccine rollout is progressing with Bloomberg's Emily Chang.
We still have a ways to go. You know, we're seeing the light at the end of the tunnel here in the United States, but until all Americans are vaccinated, we still have a ways to go. But, you know, it's going to be a while until the entire world is vaccinated. So this is going to still be with us the next few years. And I think we're going to have to really watch these variants that'll be bouncing around the world. That's actually still quite concerning.
What is it about the variants that concern you?
Well, because every time we know viruses mutate, but when they mutate, you know, they can become sometimes more deadly or more contagious. And so anytime you see these mutations, we need to be on top of them in terms of surveillance. And then we're going to have to figure out, do we need to tune various vaccines to take care of them?
Your foundation has committed $1.75 billion to the fight against COVID. I know your team is very diligent about looking at where and how that money is spent. In your view, where is the vaccine rollout working and what's not working?
Well, I think it's working in some of our high-income countries. We're starting to finally see, you know, much broader distribution, for instance, in the United States and in some of the European countries, but it is not at all working yet for middle and low-income countries. And, you know, those are places where people are struggling. They have their loved ones who get ill. They can't get them to a hospital, much less an ICU. And so they are really still struggling in many countries around the world.
So there's obviously a moral case for vaccine equity, but what about the economic case? Why should somebody in New York or San Francisco care when somebody in Africa gets the vaccine?
Well, absolutely, it's the right moral thing to do. But economically, we're not going to have as swift a recovery in the United States or in Europe if we don't make sure that everybody gets vaccinated, because what will happen is this disease, you know, we know it crosses borders. We've seen it all over the world. And so as these variants break out, they will absolutely come back into the United States and Europe and Japan. And so our supply chains won't fully be up and running. We won't get our travel industry fully and leisure up and running, or the business community up and running in terms of travel. So economically, if we're going to reopen the global economy, we've got to take care of this everywhere.
Coming up, Sheryl Sandberg and why diversity and inclusion are top priorities at Facebook.
We believe that this has to be everyone's priority because it's good for our business. It's going to build better products that serve the people all over the world.
This is Bloomberg.
Tell us something you're doing that doesn't work out, where you've failed or something you can say you're not good at.
Let me tell you something. There is plenty that I am not good at and plenty that I've failed at, but I'm not afraid to fail.
Welcome back to a special look at highlights from the 4th Annual Bloomberg Equality Summit. This year's theme, From Words to Action. After the police killing of George Floyd touched off mass protests last year, corporations rushed to affirm their commitments to diversity. In fact, the hiring of chief diversity officers spiked in the summer of 2020. Will this translate into lasting change? A Bloomberg survey of 100 corporations suggests that representation of minorities within their workforce continues to lag behind. Facebook's Sheryl Sandberg and Maxine Williams spoke with Bloomberg's Pamela Hutchinson about the social media giant's commitment to diversity and why it's critical to business.
I'm in every room because there is the assumption that there are inclusion issues in everything, and you don't want to just go to them when it occurs to you or as an afterthought. You want from the beginning that we are considering that in the way we would every other major issue. So it's integral. So I think that has been the major change for me, reporting to Sheryl and now participating in a broader range of meetings. And I think it's been great in terms of the impact, because again, we can get to things earlier. We have different perspectives in the room. I may know nothing about how to build a product, but I certainly know how the products we build impact the people who use them. And having that insight early on, I think, is just really beneficial to us and to the people we serve in the world.
Thanks, Sheryl. I know you want to say something.
Well, we hired Maxine 7.5 years ago. And it's actually really fun because Maxine and I have done a million things internally together. But I think this is our first public stage. So I was really excited to share her with the world because she's absolutely incredible. But look, we hired our chief diversity officer 7.5 years ago. The commitment to this has to come from the top. And having Maxine officially reporting to me puts her in every meeting. It puts her in my staff meetings, Mark's staff meetings. But what I would say to other companies thinking about doing this is there's lots of different structures and lots of different ways you can do it. But here's what you have to do. You have to believe it's critical for your business. We have to do this not just because it's the right thing to do, even though I want to be clear, it is. Getting more women into leadership roles, getting more women into your company, getting more people of color into leadership roles and into your company, getting more women of color, because that's where the intersectionality of race and gender makes it the hardest challenges. We have to solve these problems for Black and Latinas, have to, for those women as well. You have to know that it's good for your business, because it is. There is so much data that diverse teams make better decisions, have better results. Look at coronavirus. I've been arguing that we need more female leaders for a long time. The countries run by women had lower death rates. If there was ever a proof point that more diversity of leadership and female leadership mattered, the world just handed it to us. And it's a very sad one, but it's one we should be paying attention to. We believe, not just me and Maxine, but Mark, our product leaders, our CTO, our Women at Group is sponsored by our CTO. Our Black at Group is our exec sponsor, is our head of our business, whole entire sales organization, who's white. We believe that this has to be everyone's priority because it's good for our business. It's going to build better products that serve the people all over the world. You have to believe that. And then everything else falls from there.
Another challenge in Silicon Valley, on Wall Street and around the world, is access to capital for businesses run by people of color and women. In fact, global venture capital funding for women-led startups dropped even lower to just 2.3% in 2020. However, some investors are determined to change the status quo. TPG co-CEO John Winkelried discussed his company's efforts with Bloomberg's Scarlett Fu.
One of the challenges that we face is getting diverse entrepreneurs capital, flowing capital to growing companies that are founded and led by diverse people. Until we solve the problem of putting diverse people into the seat of being capital allocators, running funds and being able to use their networks to flow capital in that direction, I don't think we'll solve this problem. I don't think we'll make a lot of progress on it. So we've been working on this over the course of the last couple of years, really, and we've now developed an initiative internally at TPG to really brand this and drive this in a more systematic institutional way. So the objective of TPG Next is seeding, supporting, and scaling the next generation of diverse investors and managers. And we're focused on women, people of color, LGBTQ individuals. So that's basically what it is.
Can you explain how investments in TPG Next differ from what you did with, say, Airbnb or Spotify or any of your other investments in the past?
Yeah, well, I mean, Next is really designed to be sort of the catalyst to get diverse people into seats where, whether it's private equity, whether it's venture, whether it's real estate, again, as you mentioned, horizontal, it's really designed to be the effectively seed and launch managers that will then ultimately go on to be themselves successful investors and successful allocators of capital.
That was TPG co-CEO John Winkelried, and TPG, by the way, also a sponsor of the Bloomberg Equality Summit. Now let's turn to another group that's been hit hard by the pandemic: children who have spent the past year in an environment of virtual education. Access to technology is critical to a student's success, but with vast inequalities in the digital space, millions are at risk of being left behind. Harlem Children's Zone President Jeffrey Canada offered the Biden administration advice on bridging the digital divide.
I think the first thing that the Biden administration should do is admit that digital connectivity is the equivalent of textbooks. And we can't pretend that some kids can learn without it. Whether you're using it all the time or part of the time or seldom, young people have to be able to access information. The other thing I think the Biden administration has to make sure is that families can afford to be connected. There's a lot more we could do if we take this moment and decide, let's really figure out the best practice in online instruction and when that can happen for our children.
Coming up, 2020 was a year of protest against institutional racism. John Rogers is confident that corporate America got the message.
There seems to be just this true commitment to thinking, like, what can we do better?
As for Ken Chenault, he says business leaders' actions have to catch up with their words.
There's some CEOs who have been in place for 10, 15, 20 years who tell me there's a pipeline issue. And I say, excuse me, you're controlling the pipeline.
This is Bloomberg. Welcome back to our special, highlights from the Bloomberg Equality Summit. The headline numbers show the jobs are starting to come back in the U.S., and yet underneath the surface, there are some disturbing trends. The unemployment rate for Black Americans rose in February, while the overall rate fell, underscoring how recovery from the coronavirus crisis remains uneven. Errol Investments' John Rogers told Bloomberg's Sonali Basak that the pandemic exposed flaws in a system that was designed to help minority businesses.
Well, of course, when the pandemic hit, construction halted. People were, events stopped happening, so catering wasn't so important. Buildings closed, their janitorial services were not so important. The white Americans who were someone's accountant or lawyer or money manager or technology guru, those economies could do really well. Those businesses could thrive during this pandemic. So the wealth divide has just exploded in the wrong direction, partially because we have fallen into this trap of thinking about minority companies doing business in these sort of supply chain areas. At the University of Chicago, what we call it is business diversity, to show all the buyers that we want to be included in the parts of the economy where the wealth and jobs are created today. And we have the flexibility to work from home if necessary, if you have a tragedy like we had with this pandemic. So I think that is really at the heart of why things have gotten so much worse lately. And we have to change that and move this term business diversity, which we are doing here actually throughout Chicagoland. Our business community is starting to embrace that term and realize that supplier diversity is literally 40 years out of date.
So we have a question from the audience with a few minutes left, and it's what evidence or signs of hope do you see to move the discourse away from polarized views and towards universalization? Do you see the conversation changing?
Yes, the conversation is changing and pretty dramatically. After George Floyd's murder, the number of calls that I've gotten from CEOs from various businesses to come and speak about diversity and inclusion, there seems to be just this true commitment to thinking, like, what can we do better? On the boards that I'm on at McDonald's, Nike, New York Times, I'm having much more fulsome conversations with our management teams around what can we do, how can we ratchet up and get more done and really move the needle for Black community, where are the holes, what needs to begin, what needs to be done better. So I'm hopeful there. And then finally, we have a progressive congressional leadership, and that is helping, and a progressive president. People often look to Washington, D.C. and get guidance and direction. And I think that's also helping to create some real tailwinds that are really creating more equal opportunity for minority entrepreneurs to do well and to maybe finally have access to being a customer. And I think that'll be very, very important.
From individual conversation, words, comes collective action. A coalition of leading U.S. companies has launched the 110 Initiative, pledging to upskill, hire, and advance 1 million Black Americans over the next decade. Ken Chenault is a co-founder of 110, and he shared why he thinks it will work with Bloomberg's David Weston.
What we felt very strongly is that there was a need to get corporations collectively focused on this issue with a very specific target. 1 million jobs in 10 years. And what that meant was that each company had to make a financial commitment for 10 years and a jobs commitment for 10 years. Because we've got to be persistent at this, David. Many companies have tried this on their own. A few have been successful, but the reality is collectively, large companies have not done a great job on diversity. And part of it is we have to be more innovative and develop some approaches that will allow more Blacks to be in family-sustaining wages. There's nothing more ennobling than, in fact, to have a job. But it can't be a dead-end job.
So this is talking about entry level and above entry level, moving people up the chain.
Yes.
Let's talk about the top of the chain, because this is something that is much discussed, have been for a long time. I'm not sure how much progress we've really made at the top of the companies, and that's C-suite, that's boards, you name it, in terms of really having diversity and inclusion. You have a lot of experience with this, Ken. Where are we at this point? Do you think we have made progress?
I think we've made some progress, but if you look at the numbers, it's disappointing. So, David, there were more Black CEOs in the early 2000s than there are now. I think there were at one point 10 or 11 Black CEOs. I think there are 4. Ken Frazier stepping down from Merck after an incredible career, terrific CEO. But the reality is you would have hoped that we would have had 30 CEOs of people of color. That has not happened. There's some CEOs who have been in place for 10, 15, 20 years who tell me there's a pipeline issue. And I say, excuse me, you're controlling the pipeline. For this upper rung, you can be very focused. You can say, who are 10 people in my organization that I think have the capabilities to move up and really make sure that getting the mentoring, the job assignments, you're holding them highly accountable for performance. But I don't think we've had this focus and we haven't held people accountable.
Equality was a major issue for voters in the 2020 presidential election, and the new chair of the White House Council of Economic Advisors has made it clear it will be a policy priority for the Biden administration. Princeton economist Cecilia Rouse is the first Black American to lead the council. She spoke with Bloomberg's Jacqueline Simmons at the summit.
Structural inequalities is not healthy. It means we're leaving productivity on the table. Just as we know that income inequality and wealth inequality is not helpful to economic growth. President Biden, Vice President Harris are really committed to ensuring that racial equity, that gender equity are infused throughout the federal government, throughout our policymaking. Fundamentally, what we can be doing at the federal level is ensuring that women and other caretakers, but there are disproportionately women, are have the support that they need in order to balance their family responsibilities and their work. And I would also add ensuring that jobs pay well. So, with policies such as the minimum wage, the federal minimum wage has not been raised in 10 years. Ensuring that our home health workers have good jobs, that they don't have to be working 2 or 3 jobs and stitching them together in order to make a decent living. So I think those are some of the ways in which we ensure that women, especially people of color, are making a fair wage for fair work.
And that wraps up our recap of the Bloomberg Equality Summit. You can find much more coverage on the newly redesigned and expanded equality page at Bloomberg.com. It features analysis, information, and lots of reporting from teams throughout the global Bloomberg newsroom. Terminal clients can also get there through a new function, EQLY Go. Thanks so much for watching. I'm Carol Masser. This is Bloomberg.
Surveillance, Tom Keene, Jonathan Farrow, and Lisa Abramowitz. Extraordinary market day.
This rally just keeps on going.
But there is a tipping point.
The business team you love to watch. Weekday mornings on Bloomberg Television.
It's such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas
ultimately, it's billions of dollars from the government that will pull that vaccine through and purchase it for Americans and people in low-income countries.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
I'm Eric Schatzker, and welcome to Bloomberg's Front Row. Today, I'm talking to Dawn Fitzpatrick, Chief Investment Officer at Soros Fund Management. She oversees $27 billion for the legendary George Soros, money he uses to fund his philanthropy. Soros himself was among the most fearless and feared hedge fund managers. Dawn is determined to rekindle that ambition and to shake her reputation for being conservative.
When there is a dislocation, we're prepared, to not just double down, but triple down when the facts and circumstances support that.
Dawn is among the most powerful and influential women on Wall Street. This is what's on her mind: where to invest as the world emerges from COVID-19, the right way to think about ESG, the shocking way some corporate CEOs act towards Soros, leveling the playing field in finance. Here's my conversation with Dawn Fitzpatrick. Dawn, Soros Fund Management is the greatest name in macro investing, a name synonymous with fearlessness and audacious trades. This, after all, was the hedge fund back in the day that broke the Bank of England in 1992. But the words people use to describe the firm today include conservative, safe, and unambitious. Has Soros lost its appetite for risk?
Absolutely not. Back in the spring of 2020, we put over $4 billion to work into the dislocation. When there was a buyer strike, we were the provider of liquidity, and that is not being conservative. We lean into dislocations, and I think if you look at our returns over the last 12 months, again, they speak to really taking advantage of an opportunity set and leaning in. And the other thing I'd say is when you look at the asset management industry generally, a lot of the big platforms that can trade across asset classes have mechanistic stop losses, whereas one of the things the team and I have really focused on is making sure that when there is a dislocation, we're prepared, to not just double down, but triple down when the facts and circumstances support that.
So if the returns prove otherwise, what are they like?
So over the last 12 months, we're up just shy of 30%. And we have performed both in private and public markets. And again, I would put our returns and the quality of the returns we produced up against any asset manager or any hedge fund. The team did a great job executing. And again, we played our own game versus playing kind of the game that everyone else can play.
So if conservative, safe, unambitious are the wrong words to describe Soros Fund Management, how would you characterize it? What are the right words to use?
So this platform is just incredibly differentiated, I think, from any other pool of capital in the world. And I think really what we've been focused on is our competitive advantages. And by the way, there are a lot of them. First of all, in the asset management industry, most investment mandates are very, very tightly defined. And usually you have hundreds, if not thousands of clients, and you kind of have to play to the lowest common denominator. Versus at SFM, we have $27 billion of effectively permanent capital. Over 90% of those assets are the Open Society foundations. So we can invest anywhere, any asset class, and connect the dots across those asset classes and be extraordinarily nimble when there's a dislocation. But also, we can invest, we can hold an asset in perpetuity. Most private assets have to have an exit in 5 to 7 years. We can be a holder that's incredibly long-term. So this platform is really, really unique. And what we've tried to do is play to those advantages.
Give me an example. What are What's one of those differentiated investments? Could be something bold and daring, or could be just something you wouldn't see anywhere else.
So in March, when really what the once kind of unimaginable was happening, and you had mortgage REITs being forced sellers and forced deleveraging, we were able, in a matter of 48 hours, bid on multi-billion-dollar portfolios. We could underwrite them, we could fund them, and buy them. And again, it's a moment in time, post the financial crisis, the amount of capital that can be that nimble is just significantly smaller. Bank balance sheets are very, very pro-cyclical. So our ability to show up in a big way, and make big bets, I think is very differentiated.
Would you say you're as, having worked at a hedge fund yourself, would you say you're as nimble as a hedge fund can be?
I think we are more nimble. So think about the biggest multi-strategy hedge funds in the world. They tend...
The Citadels, the Millenniums, the .72s.
All of them. They run levered balance sheets, and they typically have very mechanistic stop losses. So they really are not built to lean into a March dislocation, at least not in the first or second inning. Versus we really are built to do that in a really different way. There's big sovereign wealth funds that can do it, but they're slow and lumbering, I would argue.
Do you have return targets?
No, so as an investor, I think return targets are a little bit dangerous, right? Because in the absence of a good opportunity set, you'll lever up at the exact wrong moment in time. That said, the foundation's spend on average is about $1.25 billion, and because of COVID, 2020 and 2021 are above that level. So the team and my goal is obviously to support that spend and help the foundation continue to grow those assets.
Do you think of performance as an investor in absolute terms or in relative terms?
So I think you have to look with both lenses, to be fair. As we shifted strategically to lean into those strengths, we gradually picked up momentum in terms of outperformance relative to peers and relative to benchmarks. So 2020 was a good year for us, but it feels like the best is yet to come.
You feel like the best is yet to come. Why?
The team has gelled in a way, I think that's really, really powerful. So instead of having a bunch of portfolio managers that are focused on maximizing their individual outcomes, we have a team that is truly focused on the aggregate results we produce for the foundation. And again, I think market structure, because of regulatory backdrop, has lent itself to being really, really rigid. So being able to be a provider of capital quickly and creatively is just increasingly valuable.
Dawn, you arrived at Soros with a mandate to make changes that ruffled some feathers, made you a few enemies, and started rumors. What changes have you made, and to what end?
I wanted an internal team that was focused on that aggregate result and not individual self kind of optimization. Doing well what we could do internally, maximizing mind share, maximizing the ability to connect dots across asset classes, and then when it comes to our external allocations, really focusing on the managers who are truly differentiated. And there, as I said, there are some, but I think making sure that we had the right internal team and the right external partners was key. And I think, by the way, as a leader, I think everyone wants to be liked, but I've never needed to be liked. And I think the team and the results speak for themselves. I think our strategy was the right one, and it's paying dividends.
You have $27 billion you manage. How is it allocated?
So right now, about half of it, a little less than half, is in private assets, and the bulk of that is traditional private equity. The other half is public markets, and again, that's partially internal, about 75% internal, 25% external. I think people naturally gravitate towards privates because it prevents them from, in some ways, from buying high and selling low. When you look at the data on private markets relative to public comps and beta adjust, this is the average, not the top decile managers, there's not as much alpha as people think there is there. So from my perspective, we like the opportunity set right now more in public markets, and what we're seeing is in some cases private valuations are getting ahead of their public market comps, and I think you have to be a little bit careful of that. And it's something that we're watching pretty closely. All that said, there are always going to be outstanding private companies and outstanding, private asset managers. But right now, things on the private side feel frothy. On the public side, we're seeing really good opportunities.
Why do you think valuations on the private side are outstripping those on the public side right now? What explains that?
Well, part of it is FOMO. There has been some extraordinary wealth created on the private side of markets, and you see some of these valuations are incredible, and a lot of hedge funds have started to play the late private into public round, and that, by the way, that was an extraordinarily good strategy over the past 24 months. So I think there's some FOMO. I also think COVID really accelerated some secular trends. So again, some of these valuations are warranted because things that would have taken 5 years have happened in the span of 12 months.
So you described some of the things that look appealing. Broadly speaking, where are you taking risk?
So again, equity long short, we see good opportunities there. On the credit side, as I mentioned, we had leaned into residential mortgages back in the spring of last year. We're actually slowly starting to lighten up on that, and we're starting to look at the commercial real estate from an opportunistic perspective. So it feels a little early on things like retail and office, but hotels are starting to get interesting. Interestingly, on the SPAC side, for a while, when it came to their pipes, it was a seller's market, and you had to take the terms. Now it feels like pipes are going to get done where the buyers can be smart structurers, and we think that could get very interesting when the target company is attractive.
So the leverage, if you will, not financial leverage, but the negotiating leverage flips from the sponsor to the pipe investor.
I think we're at that inflection point.
Interesting. Do you have an especially high level of conviction, positive or negative, about strategies or themes?
We think the whole infrastructure around crypto is really interesting. And we've been making some investments into that infrastructure. And we think that is at an inflection point. And I think, by the way, when you look at gold price action in the context of a fairly robust inflation narrative of late, it's struggled getting traction. And I think that's because Bitcoin is taking some of its buyer base away.
Do you own any Bitcoin?
I'm not going to answer that.
I want to know how you think about leverage on the one hand and hedges on the other.
Yeah, so I think when you think about leverage, you want to think about it in the context of what is term leverage versus overnight leverage. And I think you want to think about it in terms of the assets you're leveraging and the underlying liquidity. So if you, like going back to the mortgage REITs, if you think about what the trouble they got themselves into at the start of 2020, it was about having assets that ultimately weren't as liquid as they thought, and not having term around those. And when that happens, you are a forced seller at the exact wrong moment in time.
You get carted out.
Yeah, 100%.
Do you have any hedges on now?
We do, absolutely. Both on the rate side and on the public market equity side.
Now, is that because you see the risk of a, if you will, a further deterioration in the rate market? You're hedged against higher rates on the long end?
Actually, so when it comes to interest rates, absolutely. I think, while I don't think rates are going to get wildly ahead of us, it is a tail risk that you want to be aware of, and every other risk asset in your portfolio will perform badly if that happens. The U.S. Treasury market should be the deepest market in the world, and traditionally has been. But this year, we've seen days when liquidity was really genuinely challenged, and to me, that creates vulnerability, and it creates an ability for moves that are way and outsized relative to any given headline.
We saw some of the same things in the darkest days of the market meltdown in March of 2020. Not enough liquidity in the Treasury market. What does that say? What's going on under the hood? So again, and it's interesting, a couple things. I think bank balance sheets and the restrictions on bank balance sheets matter. By the way, I thought it was really interesting that the Federal Reserve did not extend the supplemental leverage ratio. So I think that matters. The fact that the Federal Reserve has been monetizing Treasury issuance over the past 12 months also doesn't lend itself to liquidity in Treasury markets. It's almost like issuing a publicly traded stock and then having all the free float owned in one place. So I think that also is problematic. Dawn, you have said ESG matters a lot to Soros. Why?
I think we can really affect behavior because we own things at the security level, and I think that matters. Obviously, the foundation that we manage money for is and being aligned.
The Open Society Foundation.
And I should step back. So the Open Society Foundation is the single largest private funder of human rights initiatives in the world. Their mission is focused on transparency of information, government accountability, promoting democracy, equitable allocation of resources. And it's important to me and the team that the way we invest is consistent with their values. And as an investor, if you're not focused on these factors and these issues, I think you really risk being in stranded assets and being in assets where the cost of capital for those who aren't doing the right thing is going to ratchet higher at an exponential rate, and vice versa for companies that are doing the right thing by society. Cost of capital is getting cheaper.
For those trying to figure out how to think about ESG, what is the right way to think about it? Is it the right thing to do ethically? Is it a way to achieve progress or specific outcomes? Or is it just a way to hedge or mitigate externalities? What's the right way?
So I think it's all of the above. First of all, when ESG first came out, it was about your exclusion list. That is not what ESG is about. From our perspective, it's about both creating the technologies that will allow a smooth transition. So investing in companies like Rivian and battery and EV is really important to us. And then it's also about taking your existing public companies and forcing a level of transparency, both in terms of greenhouse gas exposure, what their plan is to transition to net zero by 2050. When it comes to diversity, equity, and inclusion, again, shining a light, asking them to disclose what their company looks like. And from our perspective, the more transparency there is, the quicker the progress we will make.
Do they listen? Do those companies listen? Do they answer? I know why they listen and answer to BlackRock, because BlackRock has $10 trillion. Do they listen and answer to you?
I think they do, and I think we're trying to be partners. So we're not just saying, hey, check this box and we'll go away. We're trying to work with them in terms of credible plans. We're telling them why this is important to us. And for us, this really is about outcomes, not about checking a box. And I think they appreciate that. And I think every CEO or CFO we talk to genuinely wants help on this journey. And I think we can be part of that.
It goes without saying, George Soros is a living legend of the investment business. What's it like managing money for George?
So I obviously admired George before I had this role, but I have to say, being in this seat, my admiration for him has only grown. He is the most incredible aggregator and assimilator of information I have ever seen, and it is really easy to see why he, is the best investor of all time. He's 90. He's still tireless. He's fearless. All that said, he spends the bulk of his time now focused on the work of the foundation, especially now when that work is so critical. He does, he still has strong market views, and he's not shy about sharing them. And yeah, I feel lucky to get them when he
does. He still put on trades?
He's not active in the portfolio at a single trade level. Again, he's focused on the foundation side.
To the degree that he's interested, what is he interested in? What do you find you and he talking about when he wants to have that kind of conversation?
It's the trades that are predicated on a geopolitical view.
Mm-hmm. Makes sense.
Are the ones that he tends.
The foundation of his career.
Yeah, and again, his insights and his ability to gather information is pretty incredible.
George is perpetually the target of conspiracy theories. He's demonized by far-right extremists. You know all of this. To what degree does that get in the way, impede anything that you and your colleagues do at Soros Fund Management?
So, there have been IPOs where a corporate CEO has zeroed us from the book.
Seriously?
Yeah. So that has...
On the basis of political views?
Yes. That said, I just have to believe more people than not view the work George does as a true benefit to society. And I think there are more times that it works to our advantage than to our disadvantage.
I would be remiss in not asking you to name some of those companies that have X'd you out of the allocation book.
And by the way, I would love to, but I will not. I will refrain.
Don, the playing field for women in finance still is far from level. I can't say that from experience, but I can certainly see that it's the case. What do you consider the biggest obstacles to advancement for women in finance or investing, whichever you prefer? And what needs to change for those obstacles to disappear?
So I think this is a really important focus, and it's interesting when it comes to women and other underrepresented groups in the asset management and financial industry. I think there's been a narrative, and especially around women, that it's about attrition. McKinsey has done some of the best work in this area, and when you look at it, it's not, the data doesn't really say it's
not people taking themselves out of the equation.
Not first order. What the data shows is it's the first couple rungs in a person's career that are hard to get over. So for women, they are 24% less likely to get the first promotion than men, even though they enter the industry at the exact same rate as men. So one of the things we're kind of committing to do, and we're not a huge organization, we're 200 people, but is to bring in women and other underrepresented groups early in their careers, and then foster them. Don't just bring them in as an intern or first-year hire, but commit to fostering them over a multi-year progression to set them on a trajectory where they really can be future industry leaders and really commit to their success. But to be clear, it's about getting them over those first couple promotions. And ideally, I obviously want these candidates to stay at SFM, but one of the things we're committed to is if for their career, it's better they go somewhere else, we'll facilitate that, but we won't we'll still be vested in their success.
Dawn, I read that Blackstone approached you during a recent search for an investment chief in their hedge fund business. Was that something you considered seriously?
So first of all, when John Gray and Steve Schwartzman call, you're going to have the conversation. But I think this is the best job in the investment industry, bar none. And I hope to be here a really long time.
You ran investments at UBS Asset Management before coming to Soros. Would you ever go back to working for a bank?
You know, I hope to finish my career out here at SFM.
Well, there's quite a lot of that career left.
Hopefully.
You're on the lists of all the most powerful and influential women in investing and in finance, deservedly. How do you think about wielding that power and influence?
So I think there's a responsibility there. You know, one thing on those lists is I wish, like, I want to be on lists that aren't qualified by my gender, to be clear. But I do think there's a responsibility. I'm part of an informal group of really senior women in this industry, and we get together a few times a year and do Zooms and other things as well. And we spend a lot of time thinking about how to do that. And we work together. We watch each other's backs. We're sounding boards strategically for each other. And candidly, that didn't exist a couple of years ago in terms of us creating this powerful network. So I'm hoping there's more and more of that. And we're thinking about how to expand that and really watch out for the next generation of women.
Dawn, it's been a pleasure talking to you. Thank you.
Thank you very much.
Never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
Madame Lagarde, has the balance of risk actually shifted since the last policy meeting?
Well, our balance of risk is still tilted to the downside in the short term, but it is much more balanced in the medium term.
What are markets exactly playing at the moment? They seem to be continuing testing central banks.
They can test us as much as they want. We have a mandate, we have an aim, we're going to be riveted to that, and we're going to do what is required.
Emily Chang explores how a chip shortage snarled everything from phones to cars on a Bloomberg television special, Chip Crunch, Wednesday on Bloomberg Technology.
The coronavirus pandemic has changed billions of lives in countless ways. It's marked our day-to-day beyond recognition, converting the impossible to imagine into daily routines. Barren offices have left the busiest sections of cities abandoned, while unemployment and uncertainty plague economies. Faceless, masked populations observe a, quote, social distance, one of the many terms coined in the year of the pandemic. And while the outbreak has taught us a lot about limits, it's also shown how strong leadership can convert the once impossible into reality. Before last year, it was almost unheard of for a vaccine to be developed in under 5 years.
Hopefully we can move along rather rapidly to get an answer. Are they safe and effective in a timely manner, which I've said right from the beginning would likely be a year to a year and a half.
But scientists across the world have managed to produce 9 effective coronavirus vaccines in 2020. One such drug is mRNA-1273. You'll know it as the Moderna vaccine. The drug bears the company's name. The leader is founder and chairman Noubar Afeyan. Today, he's based in Massachusetts, but Afeyan's path to the U.S. was all but straightforward. Afeyan was born in Beirut to parents who survived the Armenian genocide. Lebanon's civil war drove his family to Canada in the 1970s. Afeyan eventually moved to the U.S. for a PhD in biochemical engineering at MIT, and he's been there ever since. These experiences shaped him as a person and as a leader. He says he's dedicated his career to improving the human condition through science. Today, on Leaders with Lacroix, we meet Noubar Afeyan. How has your childhood impacted the entrepreneur you've become?
I was, in fact, born in the Middle East in Lebanon of Armenian parents. Lebanon was quite a cosmopolitan place from childhood. I had lots of different influences and different cultures that I thought were quite normal to be intermixed, and lots of new ideas from all over the world. I think that, unfortunately, growing up at 13 years old, we were forced to leave the country due to a civil war that had just started, and fortunately the country of Canada took our family in as essentially political refugees, and that was probably the beginning of a set of changes in my life that got me accustomed to change, to not fearing a new environment and a new set of challenges. And then I think, probably the environment in the Middle East early on of kind of people having a long history of ideas and trade and how to think about business, and in my case, science over time. I'm sure those are all things that had influence, but I must say I wasn't aware of them until much later in my life when I started doing a set of things that I began to draw from those early experiences on. I'll say the last thing is that having seen 9 months of a civil war, having seen the building next to the building I grew up in explode, completely come down to the ground, and the consequences of fatalities there at a young age, that adversity probably made me somewhat tougher and more accepting of what would otherwise probably be extremely worrisome challenges in my business life. There were lots of ups and downs, and when you put it in the context of a country in civil war and the challenges there, it does make you realize that these are relatively small things to overcome.
You immigrated to Canada and then to the U.S. Do immigrants have a different idea of business?
Physical immigrants have already undergone the kind of trauma of being uprooted, rerouted, going from feeling familiar to completely unfamiliar, therefore disadvantaged, and having to struggle to make a go of it. And those set of experiences absolutely come in handy, both in startups, which are very much an act of survival and ultimately triumph if you can get there, but also of innovation. And that's the second thing I want to say, which is that immigrants also embody a mindset that is all about going to someplace new and accepting a new reality. And I've come over the years to view innovation as nothing more than intellectual immigration.
You were interested in things where no one else was. I think you have a PhD in biochemical engineering. At the time, it was such a startup almost in what we were studying. Why did you go into that?
Well, I actually went to an undergraduate program at McGill University in Montreal in chemical engineering. And I've thought about it in hindsight, but around the time I was graduating, I started realizing that I did not want to do what traditional chemical engineering was all about, which at that time was petrochemicals and plastics and many important fields. But I was drawn to things that were quite new and where nothing was known. And biology in 1982-83 timeframe was just beginning to become the object of the affection of engineers, just beginning. And so I was drawn to it, to be at a frontier. And look, I've explained it this way. I don't consider myself to have any natural gifts or any advantages intellectually, but I do know one thing, that in the frontier, there's so few people that I don't need a big advantage to be able to actually do something because the crowd thins out.
But what's your philosophy at Flagship? So there must be, 100 ideas a day, and maybe 4 of those work. So how do you pick those 4 and not the other 96?
Well, Flagship is an attempt to institutionalize 2 things that society considers completely individual and improvisational. That is making breakthrough innovations and starting new companies. Both of those today we consider as quite rarefied, unlikely to succeed act. And 21 years ago, almost to the day, we set out to institutionalize those 2 things. Now, I say that because how Flagship operates has a process and a systematic nature, and our whole process embraces, Francine, the notion of evolution, Darwinian evolution. And Darwinian evolution is basically variation, selection, and iteration. We simply apply that idea to new thoughts, to new original ideas. That is, we create variation, lots of different versions of the ideas. We create selection pressure. Lots of different people tell us how bad our ideas are and why they won't work. And then iteration, where we overcome the objections long before we even go into a lab to test out the ideas. And that process produces almost the survival of the fittest. So it is not our approach as investors to be choosing winners and losers. We allow the winners and losers to compete for our attention and our involvement. And the ones that are meritorious get that attention, and those are the ones we build. It's a very different way. We don't choose. We let the process lead to the winners emerging. And that's what's allowed us to systematize and over the years create well over 100 companies in this way.
Up next, Nubar Afeyan tells us how Moderna got ahead.
Of course, we had a public health duty to respond, but boy, did we not sit there and say, and 9 months from now, we're going to have a vaccine, and 12 months from now, it's going to be in 100 million people. That is a consequence. Frankly, I think if we thought about that, we probably would have gotten scared.
Asia is absolutely core to our business. It's almost 20% of our franchise revenues globally, which is significantly more than most of our global peers who are more in the mid-teens.
We want to invest, grow in China, but also we are also investing in the rest of Asia as well. Our top line growth for the region has been close to 24% last year, almost 20% of the group's revenue as a percentage of the revenue of the group. So, and this is where the group is counting on the growth.
We see company after company, these are corporates committing to net zero. So pretty much across the board, there is an enthusiasm for putting capital to work to try to get us to a better carbon future.
Credit Suisse has a fantastic brand name in Asia. We have obviously strong positions in Singapore and Hong Kong as our two main hubs, but across the region.
I have asked the Securities and Futures Commission and the Hong Kong EX to work together to explore the viability of our own Hong Kong version of specs. We remain very confident on the competitiveness of the Hong Kong stock market.
Nine vaccines have so far proven they can protect people from developing symptoms of COVID-19. One among them, Moderna's two-part shot, which is 94.5% effective. But the genesis of the vaccine predates the pandemic by some time. The biotech firm, founded and led by Noubar Afeyan, was already in talks with U.S. authorities to test its vaccine manufacturing capacity. Despite the head start, the journey to develop a COVID-19 vaccine using messenger RNA technology was hardly a bed of roses. Only Pfizer has come up with another shot using this groundbreaking technology. When Afeyan started exploring the idea of mRNA biotech in 2010, there was little information about how it might work. At the time, he said they didn't know if mRNA could effectively get into human cells, or whether it would cause a negative immune reaction. But after many trials, and with the health agencies across the world approving the vaccine, the method has proven effective. Moderna will be among the small group of companies whose medical breakthroughs helped pull humanity out of the pandemic. Is there a problem of actually pitting the health versus economy? Is this what made it more difficult at the start?
In this particular pandemic, certainly once we were afflicted and it was coming on like a tsunami of viral attack, it was too late for sure. And so I think that the steps suggested, especially given the lack of experience that people had, last time this happened was 100 years ago, people barely traveled. And so the conditions were so different that people threw out all the playbooks. And so, yes, I think that there were economic self-preservation, getting the next vote, all sorts of things that motivated, political actors to do what they do. And the World Health Organization was in no position, by the way, in a period where global institutions are under unprecedented attack of their, legitimacy or their usefulness. Of course, it was a perfect storm of conditions that allowed the virus to do maybe not the maximal harm, but damn close to the maximum harm it could have done.
Did you ever dream of finding a vaccine so quickly in the midst of a global pandemic?
No, because I'm so, and the whole team we have here, as well as in our companies, are so focused on platforms as opposed to the output of the platforms, right, that interestingly, we find ourselves, I sometimes liken to people as, we make instruments, and then there's, people that are performers that play music on our instruments. And so because in this case, the instrument now all of a sudden enabled a form of music that is helping the world, we don't fantasize over the music. We actually dream up what would be an instrument that would actually allow beautiful music to be made. I'm using, an artistic analogy, but it really is the same thing. Our focus is the impact comes from the fact that we enable a platform out of which dozens and dozens of solutions come. And so, when the pandemic came, for us, it was a great, I remember it very well, January 21st, my daughter's birthday is the first time I had a discussion with Stéphane Bancel, where he called me from Europe, where he had some discussions for the first time this was being discussed. And I thought, great, here's an opportunity to test our instrument, our platform, mRNA, in a very rapid turnaround application. So we were, of course we had a public health duty to respond, But boy, did we not sit there and say, and 9 months from now, we're going to have a vaccine, and 12 months from now, it's going to be in 100 million people. That is a consequence. Frankly, I think if we had thought about that, we probably would have gotten scared. We didn't think much about that. We thought that's 6 steps beyond where we are. If we just do every single step well, we have a chance of getting there.
Does your vaccine and the mRNA technology actually change everything going forward? What's the use of it? First of all, can you adapt this vaccine to new variants of COVID-19? And does it change the cures for cancer? Does it change other problems, for example, in genetic conditions?
Well, the vaccine doesn't do that. The vaccine has simply alerted the world that what we do might have that promise, and it's up to us to prove that it can do that. So I think that the promise of messenger RNA was evident to some of us 10 years ago, more people 5 years ago when we started attracting significant private capital, eventually in 2018 when we did a public offering. But more and more, the burden is on us to show that it can be broadly applicable. What we now know is that we can manufacture it at scales that no pharmaceutical or vaccine has ever been made at before, from a volume standpoint. We've gone from being the tiniest in output pharmaceutical company to among the biggest in certainly output of volume. And so I think that messenger RNA will take its proper place in the arsenal of medicines. How many things it applies to, we believe being an information molecule, it is going to be useful for many, many things well beyond vaccines. We have a dozen programs that are not in vaccines that are using messenger RNA. But it's up to us to prove it. I do not want to make grandiose claims that this changes everything. Certainly, people working on vaccines ought to give some thought as to why the next one should take 5 years instead of a year or two. It'll change some of the regulatory mindsets, perhaps, but I sure hope that this experience changes people's willingness to relent to the fact that sickness happens and there's not much we can do about it.
Do you think it will? Or there are a lot of people that, of course, question that. It was unclear, actually, at the beginning, with even regulators coming up with, things that could make other people question what exactly mRNA did. Do you need more transparency? Do you have worries that there's an anti-vaxxer movement that's also becoming stronger almost by the day?
Well, that's several questions in one. Let me just quickly unpack and say that I don't envy the regulators in having had to go from a start in the beginning of last year to being able to know so much about the science and the technology to be able to effectively regulate it. Nobody wants more than us a proper regulator engaged in ensuring that what we're doing ensures then the safety of those who receive the vaccine. And for that, we needed heroic effort by the FDA, by the European regulators, etc. So, and we got that, and I truly commend them. Anybody who says that corners were cut and people didn't know what they were doing, except for the fact that people did not know that this may not work and did not accept that, which we did not. People knew what they were doing, and they did it well. Now, having done it now, how will that affect how they think about the next wave of vaccines? Look, question back to you would be, are you going to be willing to sit next to somebody clearly suffering from raging flu on an airplane simply by knowing that it's not COVID? We've accepted, transmitting to each other, otherwise also deadly diseases, maybe not as deadly as this, but 30, 40, 50,000 people dying a year from just flu is problematic. Do we now think that some of these technologies could address that much better than the 50%, again, defeatist level we've accepted for flu vaccines? I believe that's the case. Is society going to demand it? Let's see.
Up next, do leaders work 9 to 5? How much do you love Dolly Parton?
Surprisingly, when I learned that she had chosen to make a donation in one of our sites to support their work with respect to our vaccine, I was pleased that our arcs had connected ever so indirectly.
market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Model minority myth wasn't something that was fabricated by the Asian Americans. It was created as a tool to alienate the Black and the Asian American communities, and it was incredibly successful.
We know the racism didn't begin yesterday. We know it's probably not going to end tomorrow, but it is our job to make sure that there's progress and we keep people safe, give people dignity.
I spent a lot of time last year to just listen, to understand, to reflect, and understand what I could do as a leader of this organization.
For many years, we've been very shareholder focused, and now there really is much more of a community requirement.
The economic downturn in the U.S., we're seeing unemployment and income losses affecting women more than men.
2/3 of the jobs lost in South Africa were women's jobs. So I think we're in a moment of crisis.
Clearly, our societies are reproducing, not producing inequality.
We need better public policy, and we need companies to step up.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Entrepreneurs spend a lot of time wondering where their next big idea will come from. Having launched his first company at the age of 24, Nubar Afeyan fits the definition of a serial entrepreneur. At 48, he founded the now world-famous biotech firm Moderna. The company's mission statement embodies the hyperactivity of its founder. Instead of waiting for problems to turn up, Moderna seeks out the next challenge and tries to offer solutions before issues arise. 9 years after the company was founded, the pandemic hit. And for Nubar Afeyan, being out in front has paid off. The chairman of Moderna firmly believes preparing for the unknown can transform how the field of medicine tackles problems. Nubar Afeyan is still with us. Do you remember that first conversation with your first investor? What was that like?
My first meeting with the first investor I ever had was the day after Black Monday in 1987, in October, when the market crashed. Wow. I was 24 years old, and I was just graduated after a few months from with my PhD, and literally I had no idea why a stock market crashing would ever affect the very first venture capitalist I met, whose name was Ginger Moore. She was one of the absolute giants in the venture capital business in biotech already back in 1983. And I went to see her. It was a place called Oak Capital Management. I remember it like it was yesterday, all full of hope and pride, and they were devastated. I mean, it was like an operating room. It was bleeding all over the place, financially bleeding all over the place. And it was interesting because she told me at the time, listen, if you want to continue doing this, this may be the best time because nobody else is going to do a startup in this environment. But she also explained to me why NASDAQ and Dow crashing would lead to venture capitalists not wanting to put money out and how the financial system was intertwined. It's really stuck with me because during the internet bubble that burst, I used to teach at MIT at the time, and I used to tell my students, this is the time when real entrepreneurs start companies, not entrepreneurs who think it's really easy. And so it's a better time to really wade into this, because you're not going to have to answer why your idea is different than 100 other people. Maybe it'll be one other idea you have to defend against. So that's how we started.
What kind of leader are you? How would you describe yourself in your leadership style?
I would say certainly I'm a leader that works on figuring out destinations that we should aim for and then chooses the directions as opposed to the other way around. I'm a leader that rather attracts and works with people who have both expertise, experience, but also creativity and appetite that far exceeds mine, even though I can give them a bit of a run for their money, because I think that's whether that's through diversity in background, diversity in age, diversity in even kind of field of expertise. If you saw my team up close, it's just an incredible melange of folks that we're fellow journeymen and journeywomen, if there is such a word, in the sense that we're learning. So I'd say it's really and a level of transparency. Very early on, I concluded that you cannot in a startup pretend you know what's going to happen, because you don't. And many leaders, try to project a level of certainty about what's going to happen in order for others to follow them. I'd rather project uncertainty about what's going to happen so that people kind of huddle up and make sure we can go forward together versus with false self-confidence. I'll say one last thing, and it's less about the leader, but it's about my mindset. Years and years ago when I was asked by MIT to teach, and I told myself you can never teach these things, I decided to instead of teaching, try to help people learn, which I convinced myself was a different activity, and it turned out to be. And I thought, what would I have wanted to know going into the space about the mindset that it takes to innovate in a breakthrough way? And what I've concluded is that mindset is best defined as paranoid optimism. And that's a combination of words that back in 25 years ago when I first started using it, you couldn't do a Google search. Well, there was no Google, but you couldn't do a Google search around. But now I think many people realize that it's one thing to be a cautious optimist, but a paranoid optimist basically is rather an optimist, but they're constantly doubting their assumptions, and they're constantly assuming things are going to change. So there's a level of almost a tortured mindset between projecting, believing, acting, but questioning.
How much do you love Dolly Parton? Did you love her before she invested in the Moderna vaccine?
No. Dolly Parton was my, when I grew up, she was an iconic. Look, I came to this country knowing very little about American culture, and even at the time, I viewed her as one of the iconic artists, and I got it. She was definitely a personality, and so that's how I knew her. I knew a bit of her music. I knew she made movies. So I found her to be an interesting kind of person. I almost felt like she embodied a piece of Americana, if you will, in her life and in her behavior. Then quite surprisingly, when I learned that she had chosen to make a donation in one of our sites to support their work with respect to our vaccine, I was pleased that our arts had connected ever so indirectly through a common interest in this activity.
I'm very happy that I'm going to get my Moderna shot today.
And of course, I think whatever accolade she's getting for having contributed to this cause generally is deserved, and everybody ought to do everything they can.
I know you teach, you play basketball. There's a number of things that you do, and you work full-time almost all of the time. What's the thing you've missed the most, actually, in the last 12 months because of the pandemic, because of the lockdowns?
Look, there's plenty of stuff we all miss. I miss my family in Sweden. My wife is from there. I spent every summer a chunk of time there. That's been cut off. And in a funny way, having lived in a civil war, early on in March when this whole thing shut down, I told people it's going to feel like a civil war in the sense that we're going to be accepting things we would have never thought possible. Fortunately, it's not people killing people, but unfortunately, it is other natural forces killing people. And I'll say that it's hurt me personally. It's taken away a member of my family in Sweden, and it happened very early on, and that's made the cause of working on this even more personal and even more difficult, because every time I talk about the vaccine, every time I talk about people suffering, I remember my father-in-law.
Noubar Afeyan, thank you so much for joining us.
Thank you.
revenues coming in better than expected. Everything. Cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
You're watching the best of Bloomberg Daybreak Middle East. The major stories driving our headlines this week. The Suez Canal finally reopens after the Ever Given container ship is dislodged. But will the disruption to global trade have a lasting aftershock for the region? Saudi Arabia's biggest listed companies agreed to reduce their dividends, redirect the money to the local economy as the Crown Prince looks to get his economic overhaul plan back on track. And Abu Dhabi begins selling futures contracts for its oil in an aggressive shift aimed at changing the way nearly 1/5 of the world's crude market is priced. First up, traffic began to move through the Suez Canal once again this week after the massive Ever Given container ship was finally dislodged. Attention then turned to the clearing of the backlog of more than 400 vessels waiting to transit through the waterway. We've got more with Simone Foxman.
Yeah, and we're seeing a bunch of different projections out of consultants and agents and the like. The Suez Canal Authority, for its part, sees a much different number than the one you mentioned. They said 2.5 days to clear the backlog and then 4 days to get things back to normal. I'll give you the numbers, however. On a typical day, we see about 50 ships transiting through the Suez Canal. That's just based on data we have seen. Looking at February, we saw an average of 52 ships. A Suez Canal Authority official telling Bloomberg that that number could rise. We could just see a higher volume of ships than typical going through the canal on a daily basis, something as much as 100 ships. But if you do the algebra here, and I did, even though it's early in the morning, we're looking at about 9 days to sort of clear the backlog of around 450 ships that are there, and then not cause, eliminate the new ships coming through. Of course, caveats, because these ships go a different direction. We also could see a prioritization of certain kinds of ships in Romania. The Veterinary Authority is calling for livestock ships to have priority to go first. We've seen vets dispatched to those ships to check on the animals. So we might not get in a uniform number in terms of a delay for every single boat.
Well, the Suez situation may have ended, but the disruption to global trade may have lasting aftershocks for the region. We got more on that and the wider Middle East markets with Hassanin Malik, head of equity research at Telemark.
Yeah, I think one of the intriguing implications in the region is, of course, this blockage was a temporary phenomenon, but it could prompt the likes of Saudi and the other oil exporters in the GCC to cultivate Israel as an alternative route for oil transport to the Mediterranean and the European market. Obviously, something unthinkable before the Abraham Accords. Now, even though the Trans-Israel pipeline, which connects Eilat to Ashkelon, has significantly less northbound kind of transport capacity than the Suez Canal or the Suez Mediterranean pipeline, it does have one key advantage, which is the port of Eilat is a deep water port. That means it can accommodate oil-carrying ships that are about twice the size of those ships that are able to pass through the Suez Canal.
Well, of course, part of the Abraham Accord is about laying those tracks for peace, which is the railway tracks from Israel through Jordan, which is the point of where they don't have the capacity at the moment to Saudi Arabia. Let's talk about the other big market focus. Imagine we move from Suez to Archegos to the oil market. Of course, we've got an OPEC Plus meeting coming up later on this week. Do you think the prince's prudence was appropriate? Do you think the Saudis will still hold their barrels off the market?
I think Saudi will continue to take one for the team, as it were, in the global oil market. And I think the reason for that is, again, this pretty hapless rollout of vaccinations in Europe, which has meant that EU demand is not going to be perhaps as strong as OPEC may have hoped, say, back in January. And with oil prices up at 65, I think that keeps everyone very comfortable in the OPEC plus family. That's why I think Saudi will probably continue to keep those restraints on. But again, it's month to month. This is not a long-term strategy, and I'm sure there will be questions asked every few weeks about this.
I want to also get to Egypt, because it's been one of your conviction calls, perhaps not so much on the equity side. That's been a laggard compared to its peers in the region. Is that disparity going to sustain? Is the carry trade play still going to be the way to go around any Egypt exposure?
Well, you're right. I mean, Egypt equities have been in a bit of a funk this year. A lot of people probably, and I would say including myself, didn't anticipate such a strong oil price. We didn't anticipate the outperformance of GCC oil exporter markets in the equity universe in this region. One thing, though, as you say, that I did feel was that this was always going to be a better year for bond investors chasing that carry trade in local currency Egyptian government bonds as opposed to local currency equities. And the big reason for that is Egyptian policymakers are still set on prioritizing a stable currency, stable level of FX reserves over everything else. And that means maintaining interest rates well above inflation. It's almost, if you like, kind of the anti-President Erdogan in Turkey stance in many ways. Now, the thing is that high real interest rates means that growth is not going to be encouraged, and that's putting off equity investors. There are other reasons too. First of all, if you think of big global emerging market funds run overseas, they typically have one holding in Africa, ex-South Africa. Historically, that was Commercial International Bank in Egypt. That stock alone is about 80% of MSCI, Egypt's index, about 40% of the EGX30. A lot of that positioning has moved into Safaricom in Kenya. Safaricom offers exposure to mobile broadband, digital payments growth. CIB is a good company, very solid, but kind of a stodgy story in comparison. The second issue is local investors. Across emerging markets, we've seen a spike in trading activity where local investors have been brought in generally by juicy dividend yields, again, relative to local interest rates. Not the case in Egypt. A third issue is back to Europe and that poor vaccine rollout. The fact that the euro has declined, bear in mind about a third of Egypt's exports are to Europe, so that's been a bit of a drag.
Hasnan, the other issue that we're discussing this morning is the vaccine rollout in the US and globally, the 90 for 90 in the US. But the vaccine rollout with airlines to tourism is still a trade that some people say is not fully priced. And you identify some markets where perhaps we are underpricing the potential for vaccine rollout and tourism. Where are the greatest opportunities that are mispriced?
Well, I think if you look at economies like Dubai, Egypt, Georgia, Mauritius, Philippines, Sri Lanka, and Asia, these are all highly dependent on tourism. But if you look at their equity markets, they've not performed as well, even as, say, Thailand, another tourist play. And yet those countries I mentioned, all of their markets are on kind of 20 to 30% discounts to historic valuation. And if you look at global emerging markets this year, there's been quite a lot of enthusiasm for commodity exporters as kind of post-COVID recovery plays. So the likes of Saudi or Russia or even Kazakhstan in oil, or the likes of Chile in copper. But we just haven't seen the same sort of enthusiasm for what should be another recovery play, very easily accessible across emerging markets, which is tourism.
Up next, Abu Dhabi shakes up the oil market as it begins selling futures contracts for its own crude. We have the details. This is Bloomberg.
Just give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
Welcome back to the best of Daybreak Middle East. Abu Dhabi this week began selling futures contracts for its oil. That marks an aggressive shift for the emirate, which is hoping to change the way nearly 1/5 of the world's crude is priced. Gulf states overall produce nearly 20 million barrels a day, and Abu Dhabi wants the futures contract for its flagship Murban grade to become the region's main benchmark. I spoke exclusively with ADNOC's Director of Marketing and Sales and Trading, Khalid Salmim, about the plan.
The demand for Murban has always been there. Murban, since its inception, has had a long list of customers, over 60 customers in 30 countries, who use Murban as a key part of their crude diet in their refined products production. As such, this is just another major milestone in providing them tools to be able to manage their risk and hedge their price exposures. So we do believe that this contract has the underlying fundamentals to ensure the liquidity required.
Have you had commitment from the Iraqis, from the Saudis, from the Kuwaitis to use the futures contract?
Well, I think the whole idea here is to make sure that the Murban is a globally freely traded commodity. And as such, it allows everybody around the world to be able to utilize it for either pricing or for managing their price risk if they are a customer. As such, we have a stellar partnership with 9 major companies, BP, Total, Shell, Vitol, but at the same time from the east where most of this crude usually is used. So we have PTT from Thailand, PetroChina representing the Chinese ownership, Japan with Impex, JS Caltex, as well as a number of MOUs that have been signed from both the US with Oxy Chevron, but also from the east with Ranchong, Unipac, Cosmo, and Trafi, for example.
Give me something to hang my hook on. What kind of volume, depth of market, what kind of forward curve can we expect to develop in 2021?
So currently, obviously, we have an export of about 1 million barrels a day, and that provides a lot of liquidity. Just comparing that to, for example, the underlying liquidity of Brent. Brent has about 800,000 barrels of production. So, and it is a mix of different grades. So from the liquidity perspective or the availability of the physical underlying asset, it is available. Now, how will non-physical players contribute to this? We have 18 contracts that are cash settled in addition to the Murban physically settled contract that will provide that additional liquidity, which allows you to hedge the spreads between WTI and Brent, WTI and Murban, Brent and Murban, and so on.
You've committed about 1 million barrels to the contract, we understand, on a daily basis. What the market and what I'm trying to reconcile is ADNOC, as a result of the UAE's OPEC plus quota, has fundamentally got a cap on production. How do you guarantee to the market that there's no risk of a supply interruption from your side?
So obviously, ADNOC has always been a reliable energy supplier, and it is a key part of our business that we continue to supply to our customer based on our commitments. And we do that through a number of initiatives, one of which, and the most prominent here, is going to be to ensure that the supply, as based on the export data, is supplied from our local and international storages. Let's keep in mind that the ownership also of Murban lies with 7 partners, BP, Total, Japanese, as well as Korean. So from that perspective, there is significant storage locally and internationally to ensure that that interruption is not there.
The bottom line in here, though, is for a truly freely traded, market-determined contract, how is that compatible with your long-term participation in OPEC+?
UAE is committed to OPEC and OPEC+. I think that the most important is to ensure that the liquidity that has been given as a forward look to the market is always there. I don't see them being contradicting in the sense that that liquidity, the underlying asset, allows all different classes of traders, being the financial traders or the physical traders or the consumers, to be able to have an even ground, transparent market price mechanism, which we believe this contract will provide.
Is there a risk that you split liquidity? If you go head-to-head with Brent, as some people are presenting this as being, is there a risk that you dilute the liquidity of the oil market?
Actually, I don't see it to be a competition. I see it generative, because mostly people enter, if you are buying from the US for the longest period, WTI, as we know, is a pricing mechanism mostly around the US. As producers in the US in the past have used Brent-related pricing mechanisms into Asia, they enter into that, and now they have a segue through the cash-settled swaps to be able to price on Murban. Personally, I see it just gives a new tool to all the producers, either in Europe or in the Middle East or in the US, to be able to get in and out as the most efficient way and what is required now. With Murban being all of it going to Asia, it's a light sweet grade. It provides an additional tool that the market has been looking for.
Let's talk about the biggest story in the world. There's one ship that is blocking the entire trade network through the Suez Canal. What exposure has ADNOC got in the Suez? What cargo have you got there? Have you got to redirect anything that was on its way to Europe?
Well, it's obviously an unfortunate event in the Suez Canal, and we hope that that ship gets freed quickly. With relations to ADNOC, as you're aware, all our crude heads towards Asia. We don't have anything in the Suez Canal. And from that perspective, we do follow this closely, because at the end of the day, it is our mandate to ensure that all our customers have a reliable source of energy. And if that is required, that we step in on behalf of other customers that have cargoes there, we will assure that we will make sure that we provide whatever support is needed.
What's the biggest market risk from the Suez blockage?
I think it's mostly on the commercial side, containers, bulk. The exposure to the oil markets and the products market, I believe, is minimal.
Tell me what's going on with demand. In Europe, we're going into new lockdowns, and with Asia. Just paint the picture for the market.
Generally, I'm an optimist. I think the world has been rolling out COVID vaccines, and as this goes on, we will see a recovery. It is obviously a recovery that has been happening. Most countries are expecting a GDP growth. The refining margins continue to be under pressure, and that's because of all the transportation loss of demand, specifically in Europe. We do believe that this will be one of the areas that will be resolved as COVID vaccines are resolved. I'm personally dying to jump on a plane again and be able to travel. I'm sure, a lot of us are looking forward to that.
I think the whole world is waiting for that. Some people are saying to me there will be a vaccine velocity spike in Q2 that will be met with a super spike in demand. Do you expect a super spike in demand in Europe in Q2?
Music to my ears, Manas. I really hope that the world recovers from this COVID scenario. I think that is the most important, and that has to be the focus of everybody. And I think that will automatically result in a demand spike. I really, truly hope that the vaccine is rolled out as efficiently as possible.
What can that do to prices? Can we hold in the 60s on a vaccine velocity rollout?
The prices have been very resilient, yeah. We've seen these prices at the 60s mark, up and down. Last week was a very interesting week. We saw a start at 64, we went down to 60, and we're back at 64 at close as of Friday close.
You're confident the 60s level will hold?
I think it's a good average. I believe that that's a sustainable average. It all really depends on how the vaccines and COVID scenario develops forward.
Up next, why some of Saudi Arabia's biggest listed companies have agreed to reduce their dividends. We have the story. This is Bloomberg.
explores how a chip shortage snarled everything from phones to cars on a Bloomberg television special, Chip Crunch, Wednesday on Bloomberg Technology.
Asia is absolutely core to our business. It's almost 20% of our franchise revenues globally, which is significantly more than most of our global peers who are more in the mid-teens.
We want to invest, grow in China, but also we are also investing in the rest of Asia as well. Our top line growth for the region has been close to 24% last year, almost 20% of the group's revenue as a percentage of the revenue of the group. So, and this is where the group is counting on the growth.
We see company after company, these are corporates committing to net zero. So pretty much across the board, there is an enthusiasm for putting capital to work to try to get us to a better carbon future.
Credit Suisse has a fantastic brand name in Asia. We have obviously strong positions in Singapore and Hong Kong as our two main hubs, but across the region.
Valuations, particularly sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Welcome back to the best of Daybreak Middle East. 24 of the biggest listed companies in Saudi Arabia will cut their dividends and instead direct the money into local investment. The plan announced by Crown Prince Mohammed bin Salman this week is called Sharik, and it's part of a bid to generate new jobs for Saudis.
This investment, which the private sector will deploy as part of the Sharik program, will produce hundreds of thousands of new jobs in addition to increasing the role of the private sector to 35% of GDP by 2030. This program was designed after intense and ongoing discussions with members of the private sector.
We got more with Hadi Ben Maluka, CEO and CIO at FIM Partners.
Ultimately, if you read the statement, there is a conscious decision to try to protect minorities. So I don't know how that can be done, but ultimately I expect some measures to protect dividends to minority. Overall, if you're investing in Saudi, you're also investing in Saudi in growth, and therefore you're also you want to see investments, and therefore cutting dividends for reinvestment purposes is not necessarily a negative news the way I see it. And Saudi, as you know, Yusuf, is going through a massive transformation of the economy, which is actually taking hold, and the private sector is also is gaining terrain against the public sector in terms of dominating the economy. So I don't read anything negative into this overall. You will lose on the dividend yield, but you will gain on growth momentum, in my view, and that's the way any long-term investor should be looking at it.
But there's also global credibility. 60% of this take will come from Aramco and from SABIC. Do you think it in any way could cause international FDI to slow down, or the flow of money into Saudi actually to slow down because the rules change overnight?
Yeah, I think I get your point in terms of volatility of decision-making, and abrupt decision like this do not help global investors in general, and predictability and is helpful. But at the end of the day, this is a country which is going through transformation. You need to accept that there will be change like this, which is radical. And I don't think that success that we're seeing in this transformation would have happened with a gradual decision making. You talk about FDIs.
Yeah.
I don't think there is much FDI in Saudi Arabia so far anyway, right? So I don't think Saudi is going to be losing much. Even portfolio flows are not significant so far. I mean, you've seen the MSCI events, and you look at the active flows versus passive flows, they've been very weak. So I do not think we are at the point where Saudi is dependent on FDI, and I don't think there is any significant impact. Even if
let's get to some of your conviction calls for a moment, because the Hajj and Umrah visitors, those are down by 71% year on year. That's your religious tourism that comes to the kingdom. This is the potential trade then around a recovery play in the kingdom, isn't it?
Yeah, it is one of them. So if you look at the COVID impact, Hajj and Umrah visitor declined 71%, as you mentioned. You went from 9.5 million visitors to 2.7 million visitors. And bear in mind that this is a big source of or contribution to the non-oil GDP. You're talking about 20%. I think as soon as COVID situation improves, then you will see this recovering, and it could have a significant impact. And many players could be winners. I'm thinking of Ta'awuniya, which is the leading insurance company in Saudi. This will result in potentially an increase of its gross written premium by 15%, albeit that's a little bit less profitable segment of their business. Other retailers can benefit as well, such as Bin Dawood, who have stores around the Haramin areas. So you will see cyclical recovery as soon as the COVID-19 situation improves. And also, as you know, Saudi has been building up that the tourism destination, and that unfortunately coincided with COVID. And I believe that that as soon as COVID is over, you will see that sector picking up. So yeah, hopeful that maybe second half of the year we start seeing a good recovery in that area.
Up next, Citigroup leads the pack when it comes to Middle East and Africa IPOs. We speak to the deal-making machine behind the highlights for the region. This is Bloomberg.
When opportunity knocks at the door, don't say, blimey, I've still got my pajamas on. Say yes to stuff, and it will take you interesting places.
We're clearly going through some very unusual times and, enormous difficulties getting groups of people to agree on things.
From Bloomberg's European headquarters in the City of London, join us on Leaders with Lacroix.
That over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Welcome back to the best of Daybreak Middle East. Citigroup led the league table for the Middle East and Africa for initial public offerings in 2020. They have also had a busy first quarter this year. We got some more light on the deal making with Miguel Azevedo, Citi Managing Director and Head of Investment Banking for the Middle East and Africa, excluding South Africa.
Listen, SPACs is the flavor of the month. Everyone wants to talk about. I think we will see in the next few months some Middle East-based promoters launching SPACs. I'm very confident that will be the case. You will also see more de-SPACs, i.e. Middle East-based companies being merged into SPACs, as it just happened a few weeks ago with Lucid, which was a PIF-controlled company, and as you have mentioned, Angami. So I'm positive. I think the wave is spreading, and it will reach our region, yes.
Miguel, great to have you with us this morning. Let's just step back for the broad context. We're all trying to understand what the Archegos fallout will be for risk management, risk committees, and investors. Do you think the Archegos debacle, as it's unfolding now, the biggest margin call in the history of the world, is it going to cause less risk appetite and more questions?
I think so. I think so. Definitely more questions. Depends on the answers to those questions, whether risk sentiment will be seriously affected. I think still too early. We've seen things like this before. It looks like this one is pre-contained. We haven't seen yet a massive impact in terms of transactions that we are launching, where we are seeing a change in sentiment. But hopefully that will remain the case. But still very early days.
So with that background in mind, what's your outlook for IPOs? How has the pipeline evolved since the last time we touched base? So we're now at the end almost of the first quarter.
Yes, we remain very positive for this year. We think here in the region, and the region being primarily UAE and Saudi, we will see quite a few IPOs this year. We see that in terms of our own pipeline, and we are aware of others. Here in Dubai, as you know, last week was announced the first IPO in the last 4 years. I think that's a game changer. Hopefully, everything will stay as it is in terms of risk sentiment, as we were discussing. So I'm still very bullish. I still think equity will make an impact this year. As you know, in the last few years, we have seen a resurgence of M&A. Debt capital markets has always been strong. Equity was really the one that was missing. I think this year will be the year for equities.
That TriStar listing, they chose to come back here as opposed to go to London. Why? What was the turning point in that discussion, Miguel?
That's very interesting. And to be honest, I think we are moving in the right direction. If the region wants to be a hub for financial services, the very first thing is for local companies to list in the local markets. Before, we didn't have the confidence to do it. We thought that you had to go to London to reach the investor community there. But now what we see is there is a pool of investors locally that are very keen on diversifying. Here in the region, you have primarily banks and real estate stocks. They want to have other sectors. They want to have companies that are exposed to global economy rather than just local. And I think TriStar, which is sort of a relatively small company in the context of the large state-owned entities here in the region, but it's a privately owned company, and it's really global. I think it is a good signal, and hopefully will be the first of many.
Miguel, I mean, you talk about some of the green shoots and some of the positive feedback you're getting. On our end, we've gotten quite a bit of negative feedback from investors who are concerned about the recent EMAR delisting, and it comes off the heels of DXB Entertainment, also delisted at the end of last year. What are you hearing on that front, and sort of what needs to be done to make sure that those concerns are addressed?
Yeah, well, I think one key element here is to bring to the market stocks that are not necessarily 100% centric in the region. Those cases you've mentioned, they are primarily domestic economy, domestic market driven. What I think we will see going forward is more companies in the region that are operating elsewhere. I think that's helpful in terms of that diversification. That's what has been missing. So whilst what you said is absolutely true, I think the solution for that is to bring different stories, different companies to the market, and to enlarge the optionality for investors.
Miguel, obviously, your job is to be bullish, not just for the clients in front of them, but also to the market which you're facing today. which industry is going to be the alpha for fees this year? Is it all going to be driven by tech, Miguel, or are we going to see more in our traditional commodity and oil and gas? What is going to be 2021's trade du jour?
Yeah, very, very interesting question. And allow me to separate the answer in two regions. In the Middle East, I think it will be still primarily traditional economies, as the region is transitioning into a new model. And what everybody is doing is, in particular state-owned entities, they are recycling capital. So they are selling stakes in existing solid businesses to raise capital to develop elsewhere and change the profile of the economy. So I think the Middle East is more traditional sectors. If we look to Africa, interestingly enough, I am absolutely convinced that the key sector will be tech and fintech. Let me just give you an example. Yesterday, we concluded a $350 million offering for Jumia, which is a marketplace in Africa. We will see more tech and more fintech businesses in Africa raising capital. The market is open, the opportunity is massive. So I actually think that will be the key industry in the African continent.
Miguel, with the improved oil prices, do you think we're going to get less of sovereign issuances, or are they still going to look to de-risk opportunistically? What's your sense?
I think they will still take advantage of the market. The market is very strong. Rates are very low. There will be further issuances. I think net-net, there is an impact. If you have more revenues from oil, you raise a bit less. That's definitely true, but still a strong market, and taking advantage of the very low rates is nearly compulsory, I would say.
Saudi electricity shares soared this week after the company posted a 3 billion rial profit for the last year. It beat expectations of a loss. We got more with the CEO, Fahd Al-Sadari.
The dividends, we had a stable dividends payout during the last number of years, and we continue to do that. It was part of the overall new mechanism where they account for all the costs to serve for SEC, including the dividends. So it was decided with the stakeholders that the dividends should stay at where it was last year, just to allow the new mechanism to kick in and decide on the balancing account, which was announced as well.
Fahd, let's flesh out, though, what this latest Sharik program means, which was announced by the Saudi Crown Prince Mohammed bin Salman overnight. Saudi electricity is going to be part of that effort, as we understand it. Can you explain to us how that might alter or affect dividends in the future? And can you perhaps also reassure investors who might see this as perhaps a sign that dividends are going to start coming down?
Absolutely, we are proud here in the kingdom to hear the announcement of Sharik program last night by His Royal Highness the Crown Prince. As we all know, Yusuf, the kingdom economy is undergoing a very major change in the role of the private sector is a key here. This new partnership agreement between the government and the private sector will expedite the transition towards sustainable growth based on a diversified economy. Now, SEC and the government have already established a more transparent and clear mechanism of cooperation through the latest announcement back in November 2020 of the reforms. As a matter of fact, we have been localizing some of our businesses over the last decade, and I can just here speak about numbers when it comes to total contracts that was awarded here in the local market. The total contract for the last 6 years was around 120 billion riyal, out of which 80% was with local contractors. That goes for material as well, where we purchased like 40 billion riyal over the last 6 years, Again, another 60-70% was sourced from the local market. And let me just give you an example of the latest mega project that is still undergoing and will be completed soon, which is the replacement of the 10 million smart meters. We were able to procure 40% from the local market made in Saudi as a meter.
Fahad, I think the message there is very clear. It's about localization, it's about the domestic economy. What the market will want to know is, and we know that you've working on this for quite considerable period of time, it's about the generating assets, perhaps privatizing them, splitting them out. Are we any closer to that? Will that happen in terms of the generating assets? Will you split the 4 companies? Is an IPO on the agenda? Is it a near-term ambition?
Well, there is no imminent plan, Manas, for the restructuring, but the restructuring now is taken by a ministerial committee, which is taking the responsibility of restructuring the company with the objective of sustaining the sector financially in the market, and also making sure that the end user or the customer will receive the most reliable services that he can get.
Up next, investors weigh President Biden's ambitious vaccine and infrastructure plans against volatility caused by the Archegos saga. This is Bloomberg.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Minority myth wasn't something that was fabricated by the Asian Americans. It was created as a tool to alienate the Black and the Asian American communities, and it was incredibly successful.
We know the racism didn't begin yesterday. We know it's probably not going to end tomorrow, but it is our job to make sure that there's progress and we keep people safe, give people dignity.
I spent a lot of time last year to just listen, to understand, to reflect and understand what I could do as a leader of this organization.
For many years, we've been very shareholder focused, and now there really is much more of a community requirement.
The economic downturn in the U.S., we're seeing unemployment and income losses affecting women more than men.
2/3 of the jobs lost in South Africa were women's jobs. So I think we're in a moment of crisis.
Clearly, our societies are reproducing, not producing inequality.
We need better public policy, and we need companies to step up.
Welcome back to the best of Daybreak Middle East. President Biden has this week unveiled his 90 for 90 plan. He promised 90% of American adults will be eligible for vaccines next month, and that 90% of the nation will live within 5 miles of a vaccination site. But his administration struck a sharply different tone on the rising number of cases.
I'm going to lose the script, and I'm going to reflect on the recurring feeling I have of impending doom. We have so much to look forward to, so much promise and potential of where we are, and so much reason for hope. But right now, I'm scared.
The war against COVID-19 is far from won. This is deadly serious. We share the sentiment of Dr. Walensky, the head of the Center for Disease Control and Prevention. The CDC expressed earlier today This is not a time to lessen our efforts.
Meanwhile, investors continued to weigh the fallout from the biggest margin call on record. Wall Street banks were summoned by the regulators over the Archegos blow-up. We got more on the global market impact with Natixis Investment Managers.
Cited it maybe more for any correction in the equity markets, but I do think that we're in overshoot territory in terms of treasury yields. It doesn't mean it can't continue for a little while, but I don't think inflation is going to be persistent. I agree with the Fed; it will be transitory, and that 6 months from now, we won't be in this inflation scare, and ultimately that is likely to cap rates. The Fed could start to intervene verbally, at least a little more forcefully at some point. Although as long as real yields and financial conditions remain extremely easy, there's no reason for alarm at the Fed, and we've already priced in a lot of optimism around vaccination, reopening, and Biden's spending plans.
Esty, we'll come back to the Biden 90 for 90 plan in just a moment on the vaccine rollout. I want to stand back for a moment. We're trying to understand the Archegos saga, the margin call, the biggest margin call of all time. And the question I have for you is more around leverage in the system. It wasn't the biggest hedge fund in the world. It created the biggest margin call in the world. When you look at margin in the system, we put it in the map. We've seen an explosion in margin trading. The scale of margin is up 70% over the past years. The biggest expansion since 1931, $800 billion. Now, that's nothing to 2008. But are you concerned about the overall level of leverage that you're seeing in markets? Are we over-levered?
I don't think it's just about leverage levels on their own. I think it's about sentiment around that, right? Yes, leverage levels have gone up. Maybe this event will lead to some deleveraging more across the board, not in the same sort of emergency manner, but over the next few weeks and months, maybe people will try to take off a little bit of risk from these leveraged packages. But when you think about market sentiment, we are not in this over-exuberant mood that, where people don't think anything can go wrong. I felt a shift really in the last week or two in terms of sentiment, people thinking there are risks out there, whether it's vaccination, whether it's inflation, whether it's, all of these smaller events that have happened recently. I don't see this uniform optimism, which means that, yes, we have to keep an eye on leverage. And again, it would be healthy if we start to see a little bit of deleveraging from this market, but I don't think it's one component on its own is enough to be that worrisome.
Within the derivative space and the Archegos scandal is, of course, the over-the-counter equity component of that. That's one of the smallest corners where there's already an opaque market. Swaps and forwards linked to stocks had a gross market value of $282 billion at the end of 2020, according to the Bank of International Settlements. Look, the fact that banks were so willing to do business with a fund manager who was charged with insider trading less than a decade ago isn't exactly reassuring. Is there more that needs to be done to ramp up some of the risk management standards and protocols and regulation?
We've seen across a number of episodes throughout this year where leverage often came into place or derivatives were used extensively, it's a more question of how much individuals can lose, right? This is one family office, but if you go back to the episodes of January, there's a concern for retail investors. And if this becomes so widespread, I'm sure regulators will start to look at it and try to protect more from a loss perspective than just any of the other aspects. So it's something to look at, I think, in the derivatives market for sure.
Esty, let's go back to the jumping off point of this discussion. 90% of adults in the US will have access to a vaccine within 5 miles. Now, this really begins to bring back the question of when we get back to normal. If we look at American Airlines, their bookings are at 60%. 60% of the adult population has access to vaccine. Their forward bookings are up at 90%. This is about the reopening story. My question to you is this. Full employment, Yellen says at the end of next year, looking at these kind of correlations, do you think that's a reasonable call, full employment, USA 2022 end off?
I do. We are definitely moving even faster than hoped in the U.S. in terms of vaccination, reopening, probably looking like May at the moment. And with the efficacy levels of the vaccines, a lot of the concerns about mutations or contagion, can you still transfer the virus, are being put to rest. I think some parts of the labor market will take a little longer to recover. And we are seeing some states remove pretty much all COVID restrictions, whether it's social distancing, capacity constraint, and masks. I'm not sure this will be on this, the countrywide scale immediately, but 2022 to go back to full employment, we'll see the numbers on Friday this week. Could be even higher than the 650,000 expected at the moment. April could be another strong month with these reopening plans. We could even see employment recuperate a little bit quicker than what Yellen was talking about a few weeks ago.
Up next, ECB President Christine Lagarde dares bond traders looking to push yields higher to try and test her. This is Bloomberg.
When opportunity knocks at the door, don't say, blimey, I've still got my pajamas on. Say yes to stuff and it will take you interesting places.
We're clearly going through some very unusual times and, enormous difficulties getting groups of people to agree on things.
From Bloomberg's European headquarters in the City of London, join us on Leaders with LACWA.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was